Could it not?
Yeah, I think the fundamental issue is growth. If we don't get high, durable, and inclusive growth, then we have problems on both sides. On the Fed side, we have a problem of distorted markets. And you know how strongly I feel about this. What makes us special in this country is the role of markets, the pricing signals, the ability to mobilize and allocate savings. So I worry that markets will end up being highly distorted, and we are going to lose something very special that drives growth and productivity. On the fiscal side, it's the debt burden, but the main issue is growth. We have got to generate economic growth, and so far we haven't yet transitioned to that phase.
So yesterday, I don't know if you're as hawkish or as worried about debt as someone like Jim Grant, but he's very worried, and he says there will be a clue that things are starting to get out of hand or unravel. And he said that watch gold and silver. Do you think that is the canary in the coal? Those are the canaries in the coal mine?
So I watched that interview. I think his thinking is that if debt becomes too high, then people lose confidence in Treasury, and then the only hedging mechanism at that point is gold and silver. My main focus is growth, not debt. And I want to stress this. It's growth. Look what's happening in the marketplace. Look at Hertz. Look at Airlines. They give you a really good illustration of the risk to market functioning. What you're getting right now is this great disconnect between fundamentals and finance. Take the example of Hertz, a company in a bankruptcy procedure that saw its share price go up almost tenfold in less than a month, came straight back down again, and now they're talking about issuing stocks, warning investors that they may be worthless. Look at Airlines. This week alone, we've gone from up 7 to 15% to down 20%. And what that tells you, it's not about the Fed. It's not about the markets conditioning to buy the dip, the fear of missing out. It's about the special moment right now in this coronavirus that makes the upside huge, but the downside, capital impairment.
You know, there's a whole school of thought in economics that you have too much debt and you permanently dampen growth because you're using so much of it, of what you're generating just for debt service. So I mean, I think it's all related, but that your growth forecast has to do with what happens with the virus. So here we are back to what's going to happen with the virus.
And policies, Joe.
And policy. All right. I didn't notice there's no animals behind you in those pictures. And we always, a week doesn't go by when we don't send each other pictures of our dogs. Where is it? It doesn't
she's sleeping under the desk and she's snoring. If you listen very carefully,
she's with you. She's with you.
She's always with me. She's always with me.
I get teary thinking about it. I love the dog so much. It's weird, isn't it? What is it? I mean, I like people too, Mohammed, but they're just so pure, aren't they? They're just so pure.
I'm with you. On that point, we can agree.
Yeah. All right. Many points. He didn't have to take a shot, did he, on that point? Anyway, thanks, Mohammed. See you later.
Thank you. That wasn't a shot. Thank you.
All right. Sounded like it. Becky.
This is. I like people too. Yeah, right. Still to come on Squawk Box, the markets, the economy, and finding solutions to economic inequality. Former Citigroup CEO Sandy Weil and NAF CEO J.D. Hoy will join us for a special interview. That's coming up in just a few minutes. In the meantime, check out the futures. They have been up this morning, but not necessarily relative to the declines we saw yesterday. Dow yesterday down by over 1,800 points. This morning indicated up by 583. S&P futures up by 66. The NASDAQ up by 185. Squawk Box will be right back.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
With the NHL season temporarily on ice, now is a good time to catch up on past games. With Game Replay on TuneIn, you can hear every matchup of the 2019-2020 season so far. And for a limited time, it's free for hockey fans everywhere. Search Classic Game Replays to start listening.
How do you keep track of all your favorite stations and podcasts? Easy. You add them to your favorites list. Just find the audio you want to bookmark and tap the heart icon. Then, whenever you want to browse your favorites, you'll find everything under the favorites tab.
Hi, this is Mike Tirico. introducing you to Sports Uncovered, the newest podcast series from the storytellers at NBC Sports that will shine a fresh light on the most unforgettable moments in sport.
The reason why I'm smiling, I might get in trouble for this.
Search Sports Uncovered to start listening today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. Avoid close contact with people who are sick. Remember, 6 feet, it's the rule. Stay your distance and always wear a mask while you're out. Avoid close contact with people who are sick. For the latest stories and updates on COVID-19, search Coronavirus News on TuneIn. Buckle up, race fans.
NASCAR is back in the driver's seat.
And you can cut straight to the action here.
With the Performance Racing Network on TuneIn, you can hear PRN's live coverage of some of this year's top events.
As NASCAR's top drivers, Kevin Harvick,
Clint Boyer, and more get back on the track.
Search Performance Racing Network to listen and see upcoming races.
Now. Breaking news on the housing market. New mortgage forbearance numbers are out, and Diana Olick has those numbers. She joins us with more on that front. Diana, good morning.
Good morning, Becky. And the weekly numbers actually look promising. The number of borrowers in coronavirus-related mortgage relief programs fell for the second straight week as cities began to reopen and some Americans went back to work. There are now 4.66 million borrowers, though, in government or private sector forbearance programs. That represents 8.8% of all active mortgages, all according to Black Knight, a mortgage data provider. Now, these programs allow borrowers to delay their monthly payments for at least 3 months and as much as a year. The numbers are down by 77,000 from last week and down by 112,000 since the peak back in May. Loans backed by Fannie Mae and Freddie Mac saw the greatest decline in volume, but all investor classes did see reductions. And while borrowers can delay their payments under the programs, mortgage servicers still have to advance those payments to bondholders for a maximum of 4 months. And at today's levels, servicers of Fannie and Freddie loans will need to pay $8.8 billion in advances over that 4-month period. Back to you guys.
Okay. Diana, thank you. Great to see you this morning. Have a great weekend. Meantime, when we return, coming up, we're going to talk to former city chairman and CEO Sandy Weil and the CEO of NAF, JD Hoy, will be our special guest. A reminder, you can always watch us live on the go on the CNBC app. We're right back after this.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history. Search classic game replays to relive some of the great contests in America's pastime. It's on demand, it's free, and it's only on TuneIn. With the NHL season temporarily on ice, now is a good time to catch up on past games. With game replay on TuneIn, you can listen to every power play, slap. The station you're listening to is experiencing technical difficulties.
We'll help you get through it. The Discovery Sport with Terrain Response 2. Land Rover, above and beyond.
Things are changing fast. Our business needs people with the right skills.
But who can help us find them?
That's what Kelly does. We'll help connect your business with the talent you need. Visit that'swhatkellydoes.com.
We need a bond on this project. I asked Markham. You know what? Here's an idea. Let's ask Markham.
That's good.
They know. Now, lunch.
Ever wonder where the people with all the answers get all the answers? Ask Markham, accountants and advisors.
With ServPro, our expert cleaning service helps reduce the spread of viral pathogens. Put the certified ServPro Clean Shield in your window and let your customers know that you're committed to a higher standard of clean. For a free quote, visit servpro.com.
Tonight, your playbook for navigating the new normal, reviving our economy, restoring American business, renewing hope for our communities. A CNBC special report tonight, 7 Eastern. Watch and listen live on the CNBC app.
Welcome back to Squawk Box. Let's take a look at some of the big pre-market movers in the Dow. Boeing leading the way, bouncing back from yesterday's slide. It's worth somewhere between $80 and $400, according to the efficient market hypothesis. Crazy. Anyway, we're back 13 points a day after a big sell-off yesterday. Walgreens, Boots Alliance is up almost 5% in the pre-market. As you can see there. Well, was now up 1.5%. And in the oil sector, ExxonMobil bouncing back as oil prices rise slightly this morning. We're going to talk more about the market and the economy and finding solutions to the racial economic divide with the former chairman and CEO of Citigroup, Sandy Weil. A big interview coming up on Squawk Box. Stay with us.
With millions of podcasts dropping new episodes all the time, how do you keep up with all your favorites? TuneIn makes it easy. Simply head to the home screen and find your new episode section to see the latest additions.
Where do sports, culture, and basketball nostalgia collide? On their podcast, Knuckleheads, NBA veterans Quentin Richardson and Darius Miles sit down with athletes, musicians, and entertainers to get brutally honest, totally unguarded conversations about everything from current events to untold stories from the golden era of sports.
Kill O'Neal. You know that, right? I tried to tip dunk off the free throw line one time.
Search Knuckleheads on TuneIn to listen.
Ready for some straight talk on what's happening in the MLB? On the Barstool Sports Podcast starting 9, Dallas Braden and Jared Carrabis cut through the BS to break down the league the way they really see it.
Yeah, we're continuing our little mini-series of college baseball coaches in addition to bringing you major league players from throughout the league. If you've been listening to Starting 9 for some time now, you know that we've had a big leaguer on every single episode for probably 2 years now.
Search Starting 9 on TuneIn to listen.
Okay, here we go.
With the NFL draft in the books and the schedule set, check out a TuneIn podcast for daily updates on the lead up to the 2020 season. Like the Ringer NFL show, where a rotating cast of Ringer experts talk with players, coaches, and special guests about the NFL landscape.
A lot of the other teams that we consider...
Or ESPN's NFL Live.
If there are some delays because of the COVID-19...
Search sports on TuneIn to explore these pods and much more.
As global COVID-19 cases continue to tally in the millions, local and national...
Prescription eyewear can be really expensive. But here's a secret. Glasses don't actually cost that much to make. Surprise! Especially when you design your own eyewear and then sell it directly to your customers. Like we do. Oh, hi. We're Warby Parker. Our glasses start at $95, including prescription lenses. And the best part? You can try 5 pairs for free at warbyparker.com.
Looking to refinance your mortgage? The first thing you want to do, find out how much your home is worth.
Just go to ownerly.com, enter the address, and see the home value instantly. Come to ownerly.com and see what your home is worth for free.
Welcome back, everybody. As America continues to reel from its twin crises of civil unrest and the coronavirus, our next guests say that education actually holds the key to creating a more equitable society. Brookings calls the U.S. education system one of the most unequal in the industrialized world, where students have vastly different experiences based on their social status. Joining us right now is Sandy Weil. He is the architect of the modern-day big banks. He's the former Citigroup CEO and chairman, the former president at American Express, and the founder and chair at NAF. J.D. Hoy is the CEO of NAF, and welcome to both of you. It's really good to see you. But, Sandy, I hope that given what we've seen in the markets yesterday, you don't mind if I ask a couple of questions about what you're thinking right now with the economy, just based on what we're seeing. Okay, great. Sandy, first of all, it's good to see you. It's been far too long. But we've been watching the financials get hammered just about as much as any other industry that's out there right now. That's because we think we're going to see zero interest rates for forever, essentially, and because we're worried about the fallout from the coronavirus and the economic shutdown. If you were looking at this, looking at the financials, do you think they have been unduly hammered at this point, or do you think that they're down and they're down with good reason?
I don't first understand that I don't have any inside information, but I do think that the financial industry is in very good shape this time. And I think that the stocks are selling, a lot of them well below book value. Some of them have created different models. And for example, I think companies like Morgan Stanley and Schwab are really very good buys for the long term because they really represent the building up of assets, recurring income. I think they've made a lot of very smart moves, and the stocks are really, really cheap relative to the potential. I think that the industry is in good shape, and we've got to see what's going to happen, but I would expect they come out of this and people will make some decent amount of money owning financial companies, including some property casualty companies.
Let's talk a little bit about what we have seen from the big banks to this point, and that's tens of billions of dollars that they're taking in lost loan reserves and getting ready for what could be a very difficult, let's say, year or 2 years even to come. If you listen to some of them on their conference calls, they talk about how a recession could last out to 2021. Sandy, if you were still running a big bank, would you be that conservative as well?
Well, I think banks always have to be responsible. So I would assume and hope that they're not making loans with the understanding that they can't be paid back. I think that our government, both the Federal Reserve and the Congress and the presidential operation, really have done a lot to try and get our system back on track. The Federal Reserve's balance sheet has increased from less than $2 trillion to over $7 trillion already. And they're adding to that by the rate of about $20 billion a day. So I think they're well on their way to $10 billion. And that money has to be put to work in certain places. And, stocks paying a lot higher rate in dividends than you can get on short-term or government bonds. So I'm hopeful that we're on the right track.
What do you think of what we've heard from Jay Powell about how they'll be keeping interest rates at zero for quite some time to come? And no one's really pushed it there yet, but you think it's possible we see negative interest rates in this country?
I think it's great that we have the head of the Fed that is not an economist. And I think he's been really, really terrific in how fast he acted. And I think that really has put us in a position to be able to do better than people could have expected in a recovery. And I think the fact that we've really embraced a public-private partnership where the government is working with the pharma companies and the biotech companies to come up with solutions to the COVID-19, both in the form of medications as well as vaccines. And what appears to be happening in a very, very fast way is making an enormous amount of progress in that direction.
Great. Let's shift gears a bit and talk about why you were booked to come on in the first place. And that's to talk about NAF, which originally started out as National Academy Foundation. JD, thank you for being with us this morning, too. Sandy, pleasure. Let's just talk a little bit about what this is, why you founded it, and what you've been trying to do at NAF.
Well, we started NAF in 1980 in New York City with one high school in Brooklyn. And basically, it was started to try and encourage our education system in New York to teach young people about the opportunities in the financial industry and how that works. Because a lot of companies were thinking about moving their back offices out of the city at that point in time. And we created a partnership that worked with the Board of Education and NAF, and also with the teachers' unions. And the teachers' unions at the beginning encouraged teachers to take courses in the financial industry so that they knew something about what they were going to go and teach. And over the next 40 years, we've expanded from that one school in Brooklyn to about 600 and some odd academies in 32 states with 112,000 students. And we've expanded the subjects that we teach from financial services and second hospitality and tourism to engineering, information technology, and health sciences, which are where a lot of the jobs are. So about 2/3 of our students are in STEM-type programs. Our students that get to the 12th grade, 99% of them graduate and about 85% of them go on to college. So we really believe that mentorship and summer internships are really an important part of a young person's education. And companies now feel, and the Business Roundtable has said, and a lot of company CEOs have said, that they really think that they have a social responsibility to work with the part of the American population that really does not have and has not had the opportunity to learn about the future of digitization and what's happening in our economy. So I think that we're really in a terrific place. I think it's about time that companies understood that it's much more, it's just as important to have social responsibilities as it is to have a responsibility to shareholders and to employees. And I think that for that statement to work, I think the CEOs of companies have to be involved, and because they are really the leaders, and that's what leadership is about, leading a subject like this that has not been focused on as much as it should be, as well as coming up with a way to grade people so that their compensation is based not just on how they do as far as creating financial profits, but and new products, but also what they're doing in being socially responsible and getting the underserved to participate in our economy. And I think as part of that, it's very important for corporate America to give high school students summer internships, even though the students are younger than 18, but they're very, very eager. And by doing that, they're opening these students' eyes that they will want to go to college and get the kind of education that will give them a chance of being successful and participating in the great American experiment.
Hey, JD, I spoke with the CEO of Dow Component yesterday who pointed out that the solutions for the problems we're looking at can't be created overnight. And I think you're an incredible example of that, starting in 1980 and building your way. What kind of cooperation have you gotten from the business world along that way? And what are you seeing now that so many Americans and so many businesses are looking for ways to help immediately?
Well, let me give you one example is that we've spoken to Greg Hayes, who runs Raytheon Technologies, about opening some schools in Puerto Rico where they have some plants. And we opened 2 schools about 4 months ago, right before the pandemic broke out. And the young people there are really, really terrific. And we hope to do a heck of a lot more in Puerto Rico because, they've had the problem with that big hurricane that they still haven't recovered from. They've been having earthquakes over and over. And a lot of industry left the country because of the phasing out of Rule 936, which allowed companies, and mainly pharma companies, to produce pharmaceutical products in the country and not pay taxes and pay the money out in dividends that they made down in Puerto Rico. And that when that law went away, I think it created what we see now of the supply chain for supplying drugs in the United States is based on operations in China and other parts of the world rather than something that is homegrown. So I think we should work on bringing back that law so that industry can come back to Puerto Rico and that we bring the pharma industry back to Puerto Rico so we'd be in control of our destiny, so to speak, and be in control of the supply chains of a lot of different products, and yet creating an opportunity for the young people that live in Puerto Rico and giving them a chance to rebuild their country.
JD, what do you hear from students who you talk to in these programs? What do you watch as they kind of go through the 4 years, and then how many of them do you hear back from once they go on to college and beyond?
Yeah, we have a really nice alumni network, and we have some great examples of students who have been highly successful by using the Career Academy framework to connect. I think the real magic, the real brilliance in what Sandy put together for NAF, 40 years ago, is that this is a partnership. This is not waiting for schools to get their work done and then employers hire the people they want. This is an opportunity for employers and schools to work together with communities and inspire young people to engage more officially and formally in their education and also in their career planning. I can't tell you the number of young people who say they had no idea of what it was like to work for a given company, and it's changed their aspirations, it's changed their viewpoint, and from the company's perspective, they have been thrilled at getting the future consumer's viewpoint into their work. And COVID has put us on its head. I mean, and we've been talking for 30 years about the importance of technology and how we need to do better. Well, COVID shut our schools down, and I am very concerned that we have to lean in hard and fast right now to make sure that we do not lose the gains that we've made in education. And we need to amplify, get technology, get access and connectivity to every student. And part of that can be tied to internships. It can be done virtually. We're doing it now.
Where is that happening virtually now? Because that's been another big question about coronavirus, that schools that have the money were already set up and had their kids already had laptops, and right. Schools that didn't have the same resources.
Ready to go, right?
Right. So what have you seen in the places?
It's the brilliance, right? It's the brilliance of Sandy's design of saying partnerships matter by bringing companies to the problem. Bring companies in, solve the problem, identify where there are gaps, bring companies in to help build the pipeline, and we have companies leaning in. We need more. We need more companies willing to say high school students matter in our long-term diversified pipeline strategies for the future. We're not going to wait till college students get the internships. We're going to start earlier, and we're going to make sure that we inspire them around our work, and we take advantage of the brilliance that they bring to the table.
Hey, Sandy, I have a management question for you, Sandy, based on a comment you had made earlier when you were talking about inequality and sort of the move towards stakeholder capitalism. I've talked to a number of CEOs throughout this pandemic who've said, look, we're realizing that maybe we can do more with less, meaning maybe we don't need as many employees. We can be productive with less employees, and yet many of them have signed on to the Business Roundtable pledge and the like, which puts employees on, I don't know if it puts it on par with shareholders and the like, but also, or other companies saying, do I cut my dividend or do I cut employees? And so the question I ask you is, what do you do in this type of environment on these type of thorny questions?
Well, I think that a CEO of a company has, as I said before, three real responsibilities. One is to their employees to have a safe environment to work in and to do the right thing. The second is to a responsibility to their shareholders, because if they don't do well in that regard, they're not going to be able to raise the monies in public markets that they're going to need to grow their company in the future. And third, they have a social responsibility that really hasn't worked as well as it should have, because a lot of CEOs turn it over to somebody else in the company at a lower level, and they don't really lead it themselves. When I was running Citigroup, we had over 200 interns every summer, and the places that those interns worked in our company, the morale in that division or in that office was much higher, and the productivity was much better than any other place, because the people felt that they were really doing something good to make their company better and feel better about themselves.
Hey, JD, I'll ask you one more question just about things you've tried that have worked and things you've tried that maybe haven't worked, just for other businesses that are watching, maybe trying to figure out how they could go along with this and what they could do either in-house or reaching out to you.
Well, I think Becky, it's JD. Oh, okay. I'm sorry, JD. Go ahead.
I'm sorry. JD and Sandy sound so much alike. I'm sorry. I'm not enunciating clearly, and we're all working from remote on this. JD, I'll ask you that question first.
Sure. So one of the big, I think, what's worked and continues to work is designing strategies together. I mean, I think one of the big problems we have, especially in this COVID moment where people have been shut down and they can't meet together, is people try to throw ideas out and launch things independent of one another. And I think what we've learned in the process with the power of this design of bringing industry-based content into an educational experience, that it is the relevance of what is currently the current reality of the work, not maybe what we did 10 years ago. So I think what we've really learned is that we have to plan this and build this together. And Sandy puts it under the auspices of leadership, and it's clearly important. Leadership matters. And building these designs together so that community leaders, local elected officials, school leaders, and business leaders are all leading in on the same objective around young people's success, I think is the real win that we've seen. The losing strategy that we've seen, I think, is everybody wanting to start their own thing. And I think one of the things that we pride ourselves on is our willingness to partner with others and make sure that we get to all the students who need this and not worry so much about it being solely our brand, but work in partnership with others to do the right thing for our communities and our people.
And if we get the right corporate partners, I think we can take our organization to have a million students involved every year rather than 112,000, and that would really make a difference.
Sandy, I'm so impressed with what you've built, the idea that you had this vision 40 years ago, to see it in so many places. I want to thank you both for being with us today, sharing these solutions, and we hope to talk to you both again soon. Thank you very much.
Great to see you. Bye.
Thanks, Becky. Really appreciate it. Thank you.
Thank you, Sandy. Take care.
Thanks.
Okay, thanks, Becky. A lot more coming up on Squawk. Big hour ahead. We've got former White House Chief of Staff and OMB Director.
The station you're listening to is experiencing technical difficulties.
Did you know that with TuneIn's local radio feature, you can stream live FM and AM stations broadcasting in your area? Discover local news, talk, and music stations. Navigate to the local radio section under Browse to listen locally on TuneIn.
Looking for your daily fix of NFL news and analysis?
In that. So we had to blow it up into Super Bowl predictions instead.
Look no further than the Pick Six podcast, where CBS sports writer Will Brinson gets you up to speed with what's trending in the NFL that day, so that you're always in the know.
Yeah, it's pretty revealing of Brinson's methodology for predictions. When he gets mad at people for predicting good teams are going to win the Super Bowl or good players are going to win major awards, that's how you wind up.
Search Pick Six on TuneIn to listen.
Ready to talk brass tacks on what's happening in Major League Baseball? Turn to the Effectively Wild podcast from Fangraphs for daily statistics, analysis, and commentary.
One team will say, yeah, we're going to keep paying minor leaguers their stipend, and another team will say, we're going to extend the stipend through this month, and then another team will say, nope, we're cutting them off. So are extending it at least through August, which would basically be the end of the minor league regular season.
Search Effectively Wild on TuneIn to listen.
Brian Windhorst and the Hoop Collective podcast.
What about Giannis Antetokounmpo? He is going to be eligible to sign a Supermax extension, which we were projecting to be worth $240 million this summer.
Well, if the salary cap drops, and even if he's wonderfully happy in Milwaukee, it may make no sense for him to sign when he can just wait a year and wait for the revenues to recover and then lock in.
Subscribe to Brian Windhorst and the Hoop Collective.
Search the Hoop Collective to listen. To help keep you and your loved ones safe, TuneIn has the latest guidelines from the CDC. CDC says there's still precautions to prevent the spread of COVID-19. Wash hands often for 20 seconds and encourage others to do the same. Use hand sanitizer with at least 60% alcohol if no soap or water is available. For the latest stories and updates on COVID-19, search coronavirus news on TuneIn.
Good morning. Call it a comeback, or maybe don't. Dow futures surging this morning, but that's after a massive market drop yesterday, more than 3 times as big. The enthusiasm for EVs, Tesla and a potential electric vehicle rival named Nikola sucking up huge amounts of investor cash. But are the companies strong enough to sustain the interest? And we're going to go inside the intense retail investor activity in those names and others driving this market with Interactive Brokers Chairman Thomas Peterffy. The final hour of Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and the U.S. equity futures picking up some of the ground that it lost yesterday for the markets. Of course, yesterday's losses were significant. You were talking about the Dow down by more than 1,800 points just for the trading session yesterday. This morning, the Dow's indicated up by about 467 points, but that is below some of the higher levels we'd seen earlier today when you were looking at numbers north of 630 points. S&P futures are up by about 53, and then the NASDAQ is up by 150. Treasury yields for the 10-year, we've watched them climb as high as 0.9% at the beginning of this week. Now they're closer to 0.7%. Last ticket, 0.702%. Joe?
Thanks, Beck. Yesterday's market tumble came as some U.S. states reported an uptick in coronavirus cases, spotlighting that the disease is still causing considerable uncertainty for the American economy. Treasury Secretary Steven Mnuchin says that the White House is seriously considering another round of stimulus checks. But in the Senate, the debate over additional relief has been put on hold until sometime in late July, I think. Joining us now is his thoughts on another potential round of stimulus and other issues. Former White House Chief of Staff Mick Mulvaney, good to see you again.
Morning, Joe. You like my backdrop this morning? Is it better than Sandy's?
You know what? We're going to focus on your message. There's certainly no distractions there, Mick. Anyway, so we're talking about not returning these lawmakers until July 21st. So nothing could get done before then. Is it stalling? Do Republicans really not want to do anymore because the deficit hawks, whatever you want to call them, they're winning the argument within the party at this point?
But the calendar is going to drive a lot of this. Keep in mind how Congress works. Most of the heavy lifting, most of the either really big bills, really bad bills, bills that are very controversial, typically only get done twice a year, right before the Christmas break and then right before the August break. Keep in mind, and you mentioned the July, they're not back.
All right. We're going to...
I think they're gone July, I think, about 4 or 5 weeks until between now and the election.
We got part of that. We're going to take this as we go forward, Mick, because you froze a couple of times and we missed some of your answers going into that. We had Senator Johnson on. He either wants to redirect or repurpose what's already part of the $2.9 trillion. Do you foresee more money being directed, or do you think people in his camp are going to win out on this with Republicans?
Well, I hope the camp that takes the position that we need to wait. I think it's too early right now to make the decision, yes, we're going to spend it, or no, we're not. I think less than a third of the money has already flowed out of the...
Yeah, I think we're going to... Nick, this is not... you're freezing up. What are you coming in on, Skype or something? Maybe we can try and come back to this, because I did want to talk to you about
a couple of other things. Let me try one more question to get to the nitty gritty. Were you in contact with people in the White House this week, as you usually are, with the current chief of staff, et cetera? Are you up to speed on their current thinkings on a lot of issues? And what I'm thinking about is in the Post.
That you saw with Mnuchin.
The Post has a piece that Parscale might have lost the confidence of the president in terms of re-election because there's no message. Have you heard anything about that on maybe a new direction coming for what's going to happen in the next 4 months?
No, I think.
All right, I think we need. Mick, we're going to take a break and see if we can work on. I don't know what. Maybe we'll get you on the phone. I think that'd be a good idea because this is not going to work for us. So let's try and do that, Andrew, and maybe we can get some responses or answers or whatever if we take a break and try and work on this.
Perfect.
Yeah.
Okay. Well, that's a heck of a tease. Mick Mulvaney with some provocative views, I know, on some of the provocative questions that Joe's asked him, and we'll be making news on the other side of this break. In addition to that, we're going to go inside the recent habits of retail investors as well and how they're contributing to some big moves in some well-known stocks. First, though, we're going to focus on Tesla, an upstart competitor in the electric vehicle industry, then an expert on the individual investor mindset. Interactive Brokers Chairman Thomas Peterfy is going to join us. It is all ahead. Futures are up big, but check this out. In yesterday's market wipeout, the 5 most valuable U.S. tech companies lost almost $270 billion combined. We'll see if they can make some of that ground up today. Stay tuned. You're watching Squawk Box on CNBC.
Trey Wingo here from ESPN's Golic and Wingo. Every morning, Mike Golic Jr. and I sit down to discuss all the news, drama, and highlights spinning the sports world that day. And with TuneIn, you can hear us whenever and wherever you go. Just search Golic and Wingo and start listening today.
While you wait for baseball season to begin, TuneIn has dug into the archives and blown the dust off some of the classic games in MLB history.
There it goes, 3-2 pitches, hit in the air and hit well. Center field, Bader back, at the wall, it's gone!
Search classic game replays to relive some of the great contests in America's pastime.
Ground ball out to Jackie Robinson, up with...
TuneIn helps you make sure you're getting the latest
issues went away. I love what they're doing. It's already portioned out. He's eating whole foods. It's amazing.
Visit betterforthem.com and discover your dog's recommended meal plan.
I got things I want to do, but student loans were holding me back. Credible.com helped me save $600 a month with a great rate. Now I can go do what I want to do.
Visit Credible.com to see how much you could save on your student loans.
Calm. Download the free app now.
So it's just being in it at this point means he's doing a pretty good job. What do you think the president will do or the administration will do in terms of who's going to lead this campaign going into November? Will it be Parscale?
I think it probably will be. You know, I don't have any particular insight other than to say this. The president likes a lot of dynamism on his team. He likes a lot of energy. So look to the larger trends, which is he getting rid of the old people or is he bringing some of the old people back? And it's the latter. Hope Hicks is back in the White House now. There's folks on the campaign team who have not been there since the last campaign. They're rebuilding essentially the same team that won in 2016. So, you know, I saw the Post story. I don't put too much credence in it. I think that the president's very comfortable with the team. He likes having those familiar faces around, and Brad is probably there for the duration.
Mick, if you were chief of staff now and seeing what we've seen for the past 3 weeks or so, it almost feels like there's been a seismic shift in the way people view systemic racism in the country right now. Do you think the president fully grasps that at this point in terms of his response to the protests and to some of these issues? And I'm thinking about, I even saw some Republicans consider changing the name on some of these military bases for maybe some of the individuals that actually were accused of treason or whatever. And the president says absolutely not. Do you think that at the risk of satisfying certain people in his base, that there are other people that could be Trump supporters that are going to be alienated by this?
No, I think what you're seeing is that the president is a lot more comfortable working in other areas. He's much more comfortable talking about tax policy and foreign policy. Those are the areas he's comfortable with. A lot of us are like that. The president, I think, as many of us do, have a difficult time understanding the perspective of some of the minority communities because we don't have those experiences. So it's a different type of topic for him and for many politicians to be dealing with. I think they've dealt with it about as well as you possibly could under the circumstances. Face it, it's a very difficult time right now. So no, I don't think the president's out of touch. I just think it's going to take a while for him to get his voice on this particular topic. I don't think ultimately that the election is won or lost over this. I think it's going to be won and lost over a variety of things, but this will only be one of the factors.
Yeah, let's go into that because incumbents usually do pretty well, but we have seen that incumbents that have an economy that we thought was going to be President Trump's strong suit, nobody knows where we'll be 4 or 5 months from now, and it looks like the economy could be rebounding already. But what will it be, the COVID response? Will it be the economic situation in September and October? What do you think will dictate how the country's feeling? The betting odds have flipped in favor of Joe Biden just in the past couple of weeks pretty significantly.
Yeah, I think if the election turns out to be a referendum on Donald Trump, that's one thing. If it's Donald Trump running against himself, that's a challenge. If it's Donald Trump running against Joe Biden, if it's a binary choice, as many elections are, as it was in 2016, I think the president comes out on top of that. Face it, below all of these issues that we're dealing with, when you have progressives saying, let's defund the police, let's get rid of the police, is the message that elections do have consequences. And that if you elect a progressive Democrat, if you elect a certain party or a certain ideology, you'll get a different outcome. And if the president can't make the campaign about that, about a choice between left and right, Republican, Democrat, progressive, and conservative, he stands to do extraordinarily well. If it's a referendum on his performance, it's going to be a bigger challenge.
Do you, in terms of both houses, you used to be very involved with trying to figure out, how to keep one or the other chamber. How do you handicap that? How do you handicap the Senate right now, Mick?
I still think what you saw in 2016 has a really good chance of playing out. We've forgotten what happened in 2016, which is Donald Trump got hundreds of thousands of people to vote who had not voted before, and they lifted a bunch of Republican candidates into office who otherwise might not have won. That dynamic hasn't changed. The president will still get people to show up to vote who wouldn't vote ordinarily, and they will lift other Republican candidates. So I still think, listen, we're a divided nation. We really are. It's right down the middle. There's a reason that Washington is so divided. The country's not divided because Washington is. Washington is divided because the country is. These are going to be close elections in a lot of different places. Both parties have recruited some pretty good candidates. The Republicans have done a better than average job of getting some women and some minorities to run. Nancy Mace in South Carolina just won a primary the other day. The first female graduate of the Citadel. So they've got some good candidates. I think it's going to be very, very close, and anybody who tells you they know where it's going to go in November is just lying to you.
I just wonder, I remember, not everyone remembers the 60s, and there was a real tension between law and order and just letting things play out. I mean, we've got a part of Washington State now, or Seattle, that is like autonomous or something. And there's one, if you were chief of staff, what would you be saying? What would just tread very lightly on some of these issues, Mick?
No, draw a contract.
Go in and secure that area and just do what heavy-handed, whatever needs to be done to assert law and order.
Listen, I say this somewhat facetiously, so it's a little bit tongue-in-cheek, and I know you can't get away with this in today's political climate. But to a certain extent, someone should be making the suggestion that maybe Minneapolis should defund the police. Go ahead and show people what it's like when progressives run the place. I saw that the chairwoman of city council got asked a question on TV the other day. defund the police and someone breaks into your house, who do you call? And her answer was, well, that question clearly arises from white privilege. That's a real answer to some progressives, and there's a real difference in choosing between the two parties at this point in the country's history. So that's what I'd be focusing on. I'd be focusing on the contrast between Republicans and Democrats, because you're absolutely right. Folks will vote for somebody that they don't like if they think it's better for them. And if the Republicans make themselves out to be the party of law and order and safety and security, they stand to do extraordinarily well.
All right, Mick Mulvaney, thank you. We appreciate it. You always say that's why we love having you on. You will say what you mean, and we appreciate that. And these are extraordinary times. They are. Appreciate your time today. Thank you. We finally got it right on a phoner. Anyway, coming up, much more on the markets as we look for a partial rebound a day after major averages' worst session in nearly 3 months. Stay tuned. You're watching Squawk Box on CNBC.
Time with Bomani Jones.
While he was gone, Al had some kind of vote to make him the managing. You remember he used to come up all the time in the Raiders game that he was the managing general partner. By the way, don't forget, there was a lot going on in Munich. You know how tired that man was to come back and find out that Al Davis had strong-armed his team from him while he was gone?
Search the right time with Bomani Jones to listen.
An enduring impact on our world.
Need better sleep? Try Nature's Bounty Sleep 3, a unique tri-layer supplement that calms you, helps you fall asleep faster, and stay asleep longer. Great sleep comes naturally with Sleep 3, only from Nature's Bounty.
CNBC's Workforce Executive Council is a premier group of C-suite human resources executives from leading companies across the country. It offers a members-only portal and chat, plus exclusive industry content, with access to breaking news calls and digital networking experiences. The network and resources HR leaders need now. Apply to the Workforce Executive Council at cnbccouncils.com/WEC.
Welcome back, everybody. An update on a stock that has had quite a volatile trading week, and that is underselling this story. Rental car company Hertz has asked a bankruptcy court judge to approve the sale of close to 250 million new shares, with lawyers for Hertz saying recent market prices for the stock potentially present a unique opportunity. That is, Hertz could raise money without some of the conditions it might have to abide by in bankruptcy. Yeah, I guess if you have people who are willing to buy at this point. Earlier this week, the stock traded for around $6 a share. You can see right now it dropped pretty precipitously from that, and then it's now trading at $2.91, which is up 41% from where it was yesterday. So some big swings, and Hertz is just one of a number of stocks that have seen volatility like this, Andrew.
Right. It's been fascinating to watch. Meantime, speaking of some of this market volatility, retail investors may have cashed in on the recent sharp comeback for stocks. But what goes up, of course, well, not of course, but always in some cases does come down. And some small traders got squeezed hard in yesterday's market tumble. Kate Rooney joins us with more on that. Good morning to you, Kate.
Hey, Andrew. Good morning. Bullish Robinhood investors were on a roll. They'd picked some of the stocks with the best returns over the past 2 months. But as the market's momentum reversed yesterday, some are getting squeezed. The top names on Robinhood as of the close yesterday were all in the red. According to third-party aggregator RobinTrack, Ford was the top pick. That was down 9%. The airlines, which had been a winner for Robinhood investors as those rebounded, were down double digits. Carnival, another top pick, down 15%. Barclays weighing in on the trend this morning, saying Robinhood and other retail traders are not behind this year's rally. Their favorite picks tend to underperform. The analyst saying more Robinhood customers moving into a stock has corresponded to lower returns rather than higher. Two other speculative Robinhood favorites seeing a dip yesterday, Nikola and Tesla. Those two have consistently made the top 10 on Robinhood and had been soaring in tandem this month. Yesterday, though, they closed down 7% and 5% respectively. But some of these top stocks looking to open higher today as futures rebound. Guys, back to you.
Okay, Kate, great to see you. We should mention, by the way, Kate was our producer for so many years, and we're so proud of her. So, Kate, thanks for joining us this morning. We will see you in just a little bit again, but in the meantime, we want to talk more. Absolutely. We want to talk more about the retail trade and specifically money pouring into electric vehicle stocks like Tesla and Nikola. Two big calls on the former one this morning. Morgan Stanley downgrading Tesla now to underweight and lowering its price target to $650 a share. Goldman Sachs also downgrading Tesla to neutral, but it raised its 12-month price target to $950. The firm says it's still positive on Tesla's long-term outlook. Joining us right now for more is Bob Luntz. He is VLF Automotive CEO, former GM Vice Chairman, and of course, a CNBC contributor. Our own Mike Santoli, Senior Markets Commentator, is with us. Bob, I can't imagine what you're going to say about Nikola, so I'll just give you the floor. What do you make of what's happened over the past couple of days with this stock?
Well, I don't know what's causing it, but Nikola has yet to produce a vehicle, and everything is built on future expectations, which, of course, is the story with a lot of EV stocks. If you're looking for a rational economic explanation of the valuation of Tesla or Nikola, there is nothing to be found. But what it is a form of a form of mass psychosis where enough people believe that the stock's going to go up. Everybody wants to own it, so it does go up, and it becomes a self-fulfilling prophecy. And again, if you look at it rationally, future earnings, future profitability, et cetera, it makes no sense. But that's not how the market operates. The market operates on psychology, belief, expectations of a brilliant future. It's sizzle as opposed to steak. So can one explain the valuation rationally? No, one can't, but it is what it is.
Bob, just before we go to Mike, do you put Tesla now in that same category? Because you've been skeptical of Tesla throughout, and yet, you know, there is an argument to be made. They've done a remarkable job. You could question the valuation, I imagine, but go ahead.
Yeah, I fully admit that I was one of the Tesla skeptics when it looked like they were running out of cash and Elon Musk was behaving somewhat erratically. I didn't think the company had a chance, especially when they had to raise money when they were under federal or SEC investigation. I tried to do that once as a CEO, and I was told you can't. We're not going to let you raise capital while you're under investigation by the SEC. Somehow, you know, he managed to dodge that bullet, and I give him all the credit in the world. There's no question that Elon is brilliant. And like many brilliant people, he has some somewhat erratic sides, but it doesn't change the fact that he's brilliant. He's done a remarkable job. Tesla products have improved vastly in quality over the last 18 months. His design work is terrific. So they're good cars. The company appears to be stable. Electric vehicles are probably on a growth trend, but all of that does not explain a valuation like that compared to companies like General Motors, Volkswagen, Mercedes-Benz, and so forth. It's yes, many people were wrong about Tesla, myself included. Yes, they're doing a remarkable job with the vehicles. Yeah, they probably have a pretty good future, but no rational arguments can justify a valuation like that, except then everybody believes it's going to go up some more.
Mike, let me just ask you about what you think this represents in terms of the speculative activity that's being taking place in the market. We talked about some of the bankrupt companies that people seem to be speculating about. By the way, I'm like Nicola, what's the float in terms of, or even the percentage of, you think, retail versus institutions that have propped or pushed that stock up?
This looks like a real retail play thing. Obviously, there's going to be people who are on the institutional side who are believers, but above a $20 billion valuation almost instantly mostly tells you that it's kind of enjoying a little bit of the glow from what Tesla did. And the fact that Tesla went all those years with people doubting it. Tesla didn't get to a $20 billion valuation until 3 years after it was public. That would have been in 2013, went public in 2010. And all along the way, people rightly had some skepticism about whether they could do it. So they're giving Nicola credit, perhaps, for following a similar path. But I always find with stocks like this, where people believe in the long-term mission of the company, it's a rooting interest more than it is an evaluation of the business.
Right. Okay. Mike Santoli, want to thank you. Bob Lunks, thank you. It was a longer conversation. Come on back. We'll do it again. And we should mention, don't miss Trevor Milton, the founder of Nicola, on Fast Money Monday night. That's going to happen at 5 p.m. Eastern, and I know a lot of people are going to be watching. Becky.
I like how they chose the name Nikola. You know, it's Nikola Tesla. So they were like trolling Tesla when they chose the name. Love to hear more about that. When we come back, we've got some breaking data on import prices. Economists expecting a rebound from the drop in April. Stay tuned. You are watching Squawk Box right here on CNBC.
The Mina Kimes Show podcast.
Kevin Clark.
If Josh Allen became the 10th best quarterback in football this year, they'd probably win 14 games. Am I wrong about that?
No. If you as a quarterback can't win in the Bills' situation right now, they should not extend you. So many teams, Jets, do not have the information they need to evaluate their quarterbacks based on the teams they built around. The Bills do.
Listen and subscribe to the Mina Kimes Show podcast.
Search the Mina Kimes Show to listen.
Because we've got miles to make up.
Go to Ram.com to shop and buy online, where you can get $6,300 in total values on the 2020 Ram 1500 plus these additional incentives.
It's only human to pursue the elusive, while also capturing the possibilities. Even something like CO2. Chevron has spent over $1 billion on carbon capture projects and is investing in startup companies working to transform carbon into new forms of energy to help address climate change.
Our retirement plan with Voya gives us confidence.
We can spend a bit now, knowing we're prepared for the future.
Surprise!
We renovated the guest room so you can live with us.
I'm good at my condo.
Well planned, well invested, well protected.
Voya, be confident to and through retirement.
I sent your new prescription to the pharmacy. Any idea how much it will cost? You have a choice. Insurance or GoodRx? I have insurance. Insurance is not what it used to be. People struggle to get their prescriptions covered, and prices keep rising. I recommend GoodRx. You get free coupons to save on your prescriptions. Compare prices to find the best discounts.
GoodRx. Smart.
Stop paying too much for your prescriptions. Download the free app today.
Malo is my French bulldog. He made my heart bigger when he came in my life. He never really liked his food. He wouldn't eat till like 10 o'clock at night. To me, it was saying, oh, I guess I don't want to starve. He was having skin breakouts, and putting the two and two together, what you put into your body is what you get out. I know that if I'm eating a bunch of processed food, I'm not going to feel good. So that kind of led me to Farmer's Dog. Immediately, his skin issues went away. I love what they're doing. It's already portioned out. He's eating whole foods. It's amazing.
See the benefits of fresh food at betterforthem.com.
Welcome back to Squawk Box. Breaking news. It's Friday, the last trading day of the week after a wild Thursday. The May import prices, expected to be up 0.6%, are up 1%. So it certainly seems though the last couple of months, down 2.6, down 2.4, maybe in the rearview mirror on import prices. Now let's strip out petroleum. It's up 0.1. So we could see the difference of headline 1%, up 0.1 when you strip out petroleum. And on a year-over-year basis, they were down 6%. Now let's switch gears to export prices month over month, expected up 0.5%, exactly as it arrived, up 0.5%, sequentially following a big down 3.3%, and on the year-over-year number, down 6%, which is the same as the import price year-over-year number. I guess the most amazing story, in my opinion, is we're hovering at, 144 right now in 30-year bonds, which means they're down 23 basis points on the week. 10s are down a similar amount. So we see that on the week, huge drops, and that's because last Friday, there was a jobs report that was rather powerful, and the lead into the jobs report not only buoyed, of course, stock prices, but it certainly pushed yields up intraday on a 10-year, for example, over the 90 basis point mark. So we definitely have lost some ground. As a matter of fact, maybe the most important thing to look at now is that 54 basis points is the all-time low yield close for a 10-year and 99 basis points for a 30-year bond. You can see that the differences between those points and where we're currently trading really underscores how certain parts of the yield curve, 30s to 10s, has really widened out over the last several months. Becky, back to you.
Hey, Rick, just asking, looking at this increase, sharper than expected increase in import prices, put that together with what we saw yesterday with the PPI. Do you worry about inflation at this point, or is this just something because of all the unusual activity and shutdowns that we've seen and maybe troubles in the supply chain to this point?
I think the latter is most definitely true, but I do think in the grander picture, the bigger picture, that ultimately the big growth in debt, the liquidity that's sloshing around, and especially how long it takes to get on the other side of the coronavirus, all those issues together will give us an inflation surprise. The question is when.
Okay. Rick, thank you. Good to see you. Have a great weekend.
You too. Thank you, Becky.
Okay. Let's get back to this week's wild market action and specifically the retail investor trade. Retail investors are making some big gains, but also taking some huge risks and potentially taking it on the chin in sell-offs like yesterday. Joining us right now to talk about that and much more is Thomas Petterfy. He is the chairman of Interactive Brokers. And Thomas, just in terms of what you've been thinking about watching this, I know that in recent weeks you've said you're a little concerned about whether this rally could actually hold up. We did see a huge sell-off yesterday. Is that what you were worried about, or do you think there's even potentially more to come?
Well, I think that this is just the beginning. I think that more is going to come, but of course I've been wrong all along, so you cannot be sure. So there are basically two schools of thought here. One of them is that the new economy emerging from the ruins of the pandemic is going to be a different kind of digital economy that will be much stronger and more productive, and new environment, new work environment will evolve, and everything will be just absolutely wonderful. And if you don't buy these stocks now, you will never see these prices again. Other folks believe that yes, that will eventually come, but there'll be much suffering and failures and bankruptcies and problems, many problems between now and then. And then we have the Fed in between, who is trying to bridge the gap between these two visions, and I hope they'll be successful.
Hey, Thomas, let's talk about what's been happening with retail investors this week, because I think that's particularly concerning for people who watch the amount of risk they're taking on, sometimes with not a lot of due diligence, and what might happen from that. If you look at some of these stocks, we've talked about Hertz several times today. I think Hertz went from 88 cents to $6 a share over the course of 4 days in really heavy volume. You saw Delta Airlines, that it was from $27 to $36 in 5 days. AMR went from $11 to $22 in, I think, 3 days. And most of us are thinking that it was retail investors who were doing those things. Some of these stocks were too risky for the likes of Carl Icahn, who I think sold out at something like 72 cents or something, his shares of Hertz. You saw Buffett sell out of the airlines well in advance. They are people who did their homework on these things and were concerned about what they saw. Are you worried about what retail investors are doing right now?
Well, I tell you frankly, our investors, our customers, basically cannot be called retail. They have an average account size of $230,000, even though many of them are much smaller, but that is the average. So the largest holdings are basically Amazon, Apple, Tesla, Alibaba, Microsoft, Facebook. I didn't see any of this trading in Hertz and the airlines that you usually mention. So these are mostly invested in tech companies, and the largest trading volume is in Tesla, and Tesla basically incorporates the ups and downs of the entire market. It's an exaggerated picture of the entire market. So if it was interesting to hear the previous segment about Tesla, it is sort of really hard to believe that it's happening the way it's happening, but it is quite conceivable that in 20 years everybody will be driving a Tesla. It will still be driving.
It may not be something that's taking place necessarily on your trading platform if you're not seeing it, but we do know Robinhood and others had seen massive swings in the retail investors who are coming in. And a lot of this is because you've got free trading. You've got people who are locked up at home. They don't have things like sports to watch. They don't have sports to gamble on like they used to. And I just wonder, when you hear things like that, like the statistics that I just kind of ran through, does that give you cause for concern?
Well, of course, we have free trading too. People are free to choose zero commissions, in which case they will sell their orders to high-frequency traders like other brokers do. But as I say, yes, it's concerning, but we don't see a heck of a lot of this. So I really can tell you, margin borrowings are high. So the leverage our customers assume is fairly high, because we have that's basically because our margin rates are between 0.5% and 1.5%, so they are much lower than in the rest of the industry. And yes, the speculation is concerning, but it's happened. It has always happened. It's just par for the course.
Why do you think the markets have been so high? Up until yesterday, we'd seen a pretty incredible run. And still, if you look back over the last 3 months, we have seen things pick up substantially. We are well off the lows, even with yesterday's declines. Why do you think that is?
Well, as I said before, it is this notion that this new digital economy is emerging from the wreck of the coronavirus, and some people say it's because people are at home and they have nothing else to do but trade. Well, I don't know if that is so. So basically, our customers at Interactive Brokers, they have 35% cash on the average. So I wouldn't say that they are extremely overextended, but maybe at other brokers you have a different picture. I really can't tell you, and it is a problem, I think.
We were just talking with Rick about the potential for inflation, and watching just some of the recent numbers that we've seen come in, but then also watching the amount of federal spending and deficit spending that's taking place. Do you worry about inflation? And if you do worry about inflation, are stocks the right place or the wrong place to be?
Absolutely. So, by the end of the year, the Fed will have pumped into the economy maybe $10 trillion, and that money is going to stay there and slush around, and it will cause a lot of inflation. And there are people who seriously believe that stocks are a safe haven, and that's a good reason to buy. That's a good reason to buy stocks. But on the other hand, you really can't disregard the fundamentals, which are very, very, very weak, and they will still have to surface all the weakness will still have to surface. Eventually there'll be a high rate of inflation in the years to come, and at that time, stocks will be a good place to hide. And depending upon the political situation, of course.
What depends on the political situation?
Well, the question is whether we will have a business-friendly government or not, right? I mean, that is a very serious issue.
Thomas, we're out of time, but we'd love to have you come back and discuss this a little more in depth. Thank you for being with us today. It's good to see you.
Thank you.
Andrew?
Okay, thanks, Becky. Coming up when we return, key technical levels that could make a big difference for your portfolio following yesterday's washout for stocks. The S&P 500 now on a 3-day losing streak. You might not realize it, but this is the first time that's happened in more than 3 months, if you can believe that. Here are this morning's biggest pre-market gainers in the S&P 500. Stay tuned. You're watching Squawk Box right here on CNBC.
Don't forget to subscribe to our podcast. You'll get interviews, original content, and behind-the-scenes access. Look for us on Apple Podcasts or on your favorite podcast app. And subscribe to Squawk Pod today.
The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, I mean, let's just start with the headline, which is I did test positive for COVID-19. I was so tired from Saturday the 14th through Tuesday, March 17th. I kid you not, I could not be out of bed for 5 minutes without needing to go back to bed and lay down.
Search the Woj Pod to listen.
Risks, charges, and expenses. Go to flexshares.com for a prospectus containing this information. Read it carefully.
Land Rover, above and beyond.
There's a lot of sameness among online brokers these days. IBKR stands out in the crowd. We offer the lowest trading and borrowing costs. Our clients have the choice of investing globally or locally in stocks, options, futures, Forex, bonds, and funds from a single integrated account. Our premier technology enables you to optimize speed and efficiency, perform sophisticated portfolio analysis, and manage your accounts. Start investing today at IBKR.com.
Yes, we have responsibility to our shareholders, but we also have a broader responsibility to society. And that includes giving everyone an opportunity to participate.
An easy way to address economic inequality is to make sure that equal pay is a reality. Right now, companies can take a look, and if they find inequity, fix it.
People of color have much harder time accessing mortgage loans. We've got to essentially create programs and help solve this wealth gap.
Welcome back to Squawk Box. The futures right now are back to showing pre-market gains of over 600 points. We were here earlier. We got a little less bullish, a little less positive as we were up in the mid 400 range. But this is after a near 1,900 point loss yesterday. Check out how some of the biggest banks are trading in the pre-market. That was a weak spot yesterday. They are getting back some of those losses. Even those big gains there probably don't bring us even for the 2 days. Andrew.
Okay, thanks, Joe. Meantime, today's biggest stock mover, shares of Dick's Sporting Goods jumping this morning. Let's tell you what's going on here. Company has reinstated its dividend program. This after suspending it back in late April, due to the coronavirus outbreak. It will pay its next dividend now on June 30th. And take a look at shares of American Airlines. They're rising sharply. The company sees a 90% plunge in Q2 revenue, but on an optimistic note, the company expecting to reduce its cash burn rate to about zero by the end of the year as travel demand, it says, it expects to improve. And shares of Boeing are also on the rise this morning, despite the plane maker pulling back on its restart of production for the 737 MAX jet. That's according to the Wall Street Journal, which says the Boeing also told key suppliers Spirit AeroSystems to freeze recently restarted production of parts. This as the coronavirus continues to pressure travel demand. Becky.
Andrew, thanks. Quicken Loans, in the meantime, is planning to go public. People familiar with the matter tell CNBC that the largest U.S. mortgage lender has filed confidentially for an initial public offering, and that it could happen as soon as next month. The targeted valuation is still being decided, but one source says that it's likely in the tens of billions of dollars. That could make Quicken's IPO the biggest so far this year. Joe?
Okay, thanks. Coming up, we're going to check in with Jim Cramer for his first take on the trading day ahead following yesterday's action. Then the most important technical levels that you need to be aware of as extreme volatility returned to Wall Street, at least for one day yesterday. In the meantime, check out the shares of Lululemon, which just missed quarterly earnings expectations for the first time in 3 years. Digital sales rose 70%, but the company was hurt in the first quarter by physical store closures stemming from the pandemic. Stay tuned. Squawk Box will be right back.
Consistency can deliver on investment goals. Columbia Threadneedle Investments.
I have an idea for a trade.
Oh, yeah? You going to place it?
Not until I'm sure.
Why don't you call TD Ameritrade for a strategy gut check?
What's that?
You run it by an expert, you talk about the risk and potential profit and loss.
Could have used that before I hired my interior decorator.
Voila.
Maybe a couple of throw pillows would help.
Get a strategy gut check from our trade desk.
Ever since we've gone mobile on the Now platform, something's gotten into the office.
I hear you. Feels like there's no barriers between departments now.
ServiceNow, the smarter way to workflow.
Rory McIlroy, Brooks Koepka. How about Phil Mickelson, Dustin Johnson, Justin Thomas? Here comes Ricky.
PGA Tour Golf is back at the Charles Schwab Challenge today at 4 on Golf.
Hey, did you?
Yep, done.
And
Of course.
And?
Oh, yeah.
All in one
hour.
Behind the world's most productive people is the world's most comfortable chair, the incredible X-Chair, featuring patented dynamic variable lumbar support. X-Chair's adjustable seat depth keeps users small to tall, comfortable and supported. Available in breathable mesh, HDR foam, or top-grain leather. Customize comfortable positions for your neck and arms. And X-Chair's patented SiFloat Infinite Recline provides the perfect recline for users of almost any size. This is not your grandfather's office chair. X-Chair supports workers everywhere who find themselves now working from home. Call or click to get $100 off the amazing X-Chair featuring dynamic variable lumbar support. Plus, for a limited time, you can also get free same-day shipping. This deal is good for any X-Chair you choose. Create the world's most comfortable home office with X-Chair. Call or click to order today and receive a 30-day risk-free trial and $100 off.
Welcome back to Squawk Box this morning. We want to get to CNBC's headquarters where our friend Jim Cramer joins us. So much to talk about on this Friday morning. I got two stocks I want to talk about and then maybe give me a market prognostication for how to head into the weekend. But what do you make of this Hertz news? The idea that Hertz, basically a bankrupt company, is now asking the judge if it can sell $1 billion worth of stock. Would you buy that stock?
The question is, did P.T. Barnum become the CEO? I'm checking to see who's it. Is it P.T. Barnum? No, it's someone else. How do you like that? Maybe they ought to bring in P.T. Barnum because that's exactly what it takes to be able to have the guts to be able to do that offering. I mean, there's a possibility that that's worth nothing. I mean, it's kind of funny when you think about it, Andrew. If it weren't like people actually going to lose a lot of money, it's bankrupt.
Is there any way for that to work out favorably for the shareholder?
Is there any way? Well, maybe a sudden surge of rental. They undo the bankruptcy. Maybe the common stock is worth something in the redo. But, it seems to be if I were one of the large bondholders, I would be so glad that they're doing this because then I think that there's more money coming to me. Now, look, maybe they say, hey, listen, we're going to reserve this for the shareholders, common shareholders, but that's certainly not in the bankruptcy code. Maybe they have to undo the bankruptcy code. Now, by the way, I'm sure there's some lawyer who says it's fine because, if you pay them enough, they'll say it's fine.
Okay, help me with this one then also. American Airlines.
Oh, I was looking at American. That's a funny one. I mean, American, which, by the way, was the illusion that the CEO of Boeing was saying one of them isn't going to make it. They got $5.8 billion in total payroll support, $4.1 billion we paid as a grant, $1.7 billion paid as a loan. They came out with numbers today. They were down 90%. Someone was, I know you guys were saying, listen, there's a silver lining. But, 90%, if you're buying the stock, I guess you thought they were going to come in down 100%. Now, this has been going on for a couple of days. Now, I don't know who does it. You go and you buy these stocks early on. You foment, and that is a technical term, as you know, Andrew. You foment interest, and then you hope that people come in who are, again, using a P.T. Barnum-like strategy. And not by the way, a Warren Buffett strategy, but often confused, that they can foment enough activity and people think things are good.
There's a fellow out there who thinks he's better than Warren Buffett at investing. You know him, Dave Portnoy, who thinks airline stocks are going to the moon.
I guess they are. Right? He's better than Warren Buffett? Does he have a big thing like, I don't know, where else would you do it? Like Des Moines or something? I don't know. Does he own a furniture company? Is he a big pipeline guy? He's Burlington? He's got that train going? Look, this stuff it's a game. If it weren't securities, let's say it was Monopoly. Let's say it was DraftKings, and I happen to like DraftKings. It would be so much fun, wouldn't it? I mean, you pick a couple of stocks, you gut them in the morning, and then, people are stupid enough, they buy them. It doesn't even matter. Like, American wasn't even down when they came out, which was far worse than what I was looking for. But it's a different world now, Andrew, and you and I, we're relics. So I'm going to call you a triceratops. Maybe I'm a stegosaurus. What do you think? Hey, we did rule the world for a while.
But here's the thing: we always wanted to democratize the market. We always wanted more, quote, retail investors to want to get into the market and to be able to benefit from it. And now we have people in it, and I'm worried. I know I'm a professional worrier, but I'm worried.
Well, Andrew, I think you should be worried for people who do think that there's something great going on in the airlines right now. How about Carnival? Think if there's anything great going in Carnival. The Cunard, last news about Carnival's, the Cunard line's not sale until November 1, the Queen Mary 2. But, here's what you're handicapped by. You're doing homework. I heard you say you talk to CEOs. What the heck is that about with you talking to CEOs? I want it democratized. You can't talk to any CEOs. What do you think of that?
Jim, you and I, we think alike. You're much smarter than I am, but we do think alike.
I'm just trying to get a dinner invite over at your house. I mean, my wife's out in the island. I never see her. I got nothing to do. Trying to do some
you have any night you want, Jim.
Really?
We socially distanced. If you got to stay on the other side of the picnic table, but we'll do it in the backyard. I
am ready, ski daddy. Look, let people have fun.
Okay, Jim.
You are the one that wants to kill the fun. Who you think you are, the SEC? Then people can have fun. Hey, man, you're landing on Boardwalk. What do you want, Oriental? Do not pass
Jim
go,
Cramer,
Andrew.
Have a great weekend, my friend, and I do hope to see you. Come on up. I'm not joking. We'll see you in just a couple minutes.
I'm there.
Joe and Becky, the invitation is also being extended, so we have a group dinner. How about an outdoor group dinner this weekend?
How about a Zoom?
Can I get a taker?
Where you are, I think it's okay. Jersey, not quite. It's coming. I think 50 people or less or something. What is it? There's been some new dictates.
It's 50 people, but in some cases you can do 100. And then if it's either religious or political, I think you're allowed to have any number of people at least. I think that was what I was reading.
Let's not make it either religious or political. That just makes it
good
too
idea.
Tough. We got some patio furniture. We're ready to go.
Really? All right.
Zoom.
Hey, Andrew, are you?
Zoom.
I hate to ask you, are you serving rabbit? Anyway, stocks are coming off their
Cooper's such a nice little rabbit.
I know. I'm kidding.
My kids really want Cooper to go on TV, so we might have to do that at some point.
Boiled rabbit. Remember that scene? That was scary. Anyway, stocks are coming off
that was terrifying.
their worst day in 3 months. Our next guest told clients earlier this week that she saw sell signals in the market. Not a bad call here. That's what the technicals are signaling next is Katie Stockton, founder and managing partner at Fairlead Strategies. I wish everything was really simple, Katie. I initially thought, wow, a big scary correction like yesterday or a big scary pullback like yesterday that rings out some of the bullishness or complacency, and you still have an S&P above 3,000. Maybe that's the way things are supposed to work in an uptrend. Maybe not. What are the technicals telling you?
Well, we did come into this week with a gap up on the S&P 500, and sometimes after prolonged up moves, when you see these gaps on the chart, they tend to be exhaustive. So that's what we were looking at. Of course, there's an overbought extreme. Nobody would argue against that. However, sometimes those overbought extremes can actually be a good thing, and I would argue that this one is good, but just not in the short term. Intermediate term, we've seen intermediate term momentum improve, long-term momentum still basically neutral here. But with what we've seen as of yesterday is that the market does have some excesses built into it. And that decline left what we call as technicians an island reversal on the chart. And that supports another couple weeks of a pullback. We had initial support right around 29.55 for the S&P 500. That's seeming a bit more conservative than we'd hoped. So now we're looking at support just below about 2,800. And that's where the market held in May, which is when we actually got that momentum buy signal that has now switched to a momentum sell signal.
So you would expect you would expect to see 2,800 before 3,100 on the S&P?
I think that does frame downside risk based on yesterday's gap, based on the fact that we do have these short-term momentum sell signals. But what I want to do is frame it as a pullback that would be an opportunity to add exposure, given the fact that the pullback did follow a lot of breakouts. The breakouts were short-term in nature. We're not seeing too many stocks at new highs, but indeed we've seen a lot of stocks clear their 50-day moving averages, clear their April highs, and those are incremental positives. So we are looking at the pullback right now as counter trend from an intermediate term perspective. But yes, that downside risk does seem to be framed more by 2,800 possibly than by 2,955.
After last week, were measures of bullishness getting stretched, or at least some of the action in some of the speculative names, some of the bankrupt companies, some of the we saw some crazy moves in a lot of parts of the market that some people thought was froth. Did bullishness go up by last Friday?
It did. It went up, but not as much as you would think based on the frothiness in those types of names. We saw the sentiment gauges get very close to what we would consider an overly bullish reading, but not quite there. And that's a good thing. It does suggest that indeed the pullback should be short-lived. We saw the VIX as one gauge of, or transactional gauge of sentiment, come right down to its 200-day moving average, and then it had a little oversold upturn. So an oversold bounce, if you will, and volatility makes a lot of sense here, but as something that would be temporary. So sentiment was not as overly bullish as you might think.
Do you do work on gold, maybe, or not?
I do.
You do? What's that? What are you seeing in terms of upside there?
It's a gradual long-term uptrend. I always believe it makes sense to have some gold in a portfolio. Short-term, more of a
but
You were just talking with Andrew about what exactly got washed out yesterday. Hard to say a lot when Hertz is up 50% pre-market.
Yeah, I mean, look, this is a kind of a comedy of errors, no insult to the board. You really, there's a bankruptcy code, and maybe Hertz management got permission. In the old days, when you went bankrupt, there would be a little bit of a stub of stock so that you could go and sell it and then show the IRS that you had taken the full loss. Carl Icahn sold a ton of the stock in the 70s, right? He sold 38%. I think if he had known that there would suddenly be a new stock, he would have hit that bid. If I were him, I'd sue. I'd sue right now. I would just hire a lawyer and sue because he sold it what the company was advertising as a bankrupt price, where the common stock was. And he has, I think, a right to be able to claim 38% of this money. And I urge him to do so, to hire a lawyer and get the money, because this is just ludicrous.
We'll see what the court says. I think they got to get to 4, right, to get to $1 billion. But even so, the 4-year bond, they're trading at 35 cents.
Well, how do you like that? I mean, here you got a company that knows that the common stock could be worthless, but is having some fun because there's so many stupid people who are bidding up the common stock when it may be worthless. I think that the government should have frozen the stock and said, listen, this is not, we don't want you to lose money, but the government does not care about whether you lose money or not. The government just says, hey, listen, if you have every right to be a stupid idiot. It's just that Carl Icahn, I think, is not a stupid idiot and recognizes when there should be money that was his because he owned common stock. But look, Hertz is hilarious, and I got to hand it to them. This was one of the funniest things they've done, and of course the joke is on the people who buy it. But you know what? Again, there's nothing in the Constitution that says you can't make people look like idiots.
Well, when we back up, is it a worthy lens for looking at market sentiment from 30,000 feet? I mean, is it indicative of anything larger? Barclays has a big piece out this morning about Robinhood. In their view, there's no correlation between aggregate Robinhood holdings and index levels, maybe on individual stock levels, but they argue that Robinhood's not behind the rally.
I don't think so. I mean, we just one random E-Trade reports its May a daily average. Its monthly activity report from we're talking about record highs. Volumes of all time in June. So no, I think it's a collective action. I want to be in favor of it, Carl. I want to be able to make everybody happy. Say buy some Hertz. And then what will happen is on YouTube 3 weeks from now, they'll say, you know what? He was part of the problem. Buy American Airlines after they put out really bad news. Well, why not? These are, if people wanted these stocks, there would be plenty of supply if they would just wait till 9:30. But no, they are fomenting action. Once you foment action, it brings in suckers, and then maybe they'll buy the stock thinking there's something going on. Of course, there isn't. There's not doubt. Carnival's not about to merge with Royal Caribbean that I know of. And you can't really have any more consolidation in the airlines. But it doesn't matter. Look, I could stand on my head until I'm blue and say, listen, please don't do this. Wait till 9:30. The stocks won't be up. Don't bid them up. And it's not Robinhood. It's whoever's bidding them up now. You're going to be able to get them lower. But if your job and your goal is to foment activity, well, you're fomenting it left and right. And that's what this is. It's fomenting.
Yeah. You mentioned the airlines, Jim. American is talking zero cash burn, positive net bookings since mid-May. Yeah. TSA traffic yesterday, 502,000 passengers. We're going to talk to Cowen's Helene Becker later on this morning. She said a couple of months ago she didn't see us getting to these levels for 3 to 5 years.
No, I mean, look, there are people traveling, but remember, I think that there's lurking here. If I were any other than Southwest, I would be doing equity deals. These are not Hertz. These companies actually, they've got an operating business, and the common stock represents the earnings stream. But if I were American and the stock pops, I would sell stock. I mean, if people are going to buy stock at these inflated prices, Americans should be in there selling stock on this news so that they borrow money from the government. They got to pay it off. Why not take advantage of this great exuberance and sell stock? I don't know why they don't. Hertz did. It would be smart.
Right. Yes, they did. I think Cowen says that so far airlines have sourced $83 billion year to date. That includes government aid. And then we got, second day in a row, Jim, of downgrades for companies like United. Today it's Credit Suisse. They go to 41. They go to 40. They up Southwest, calling it their favorite multi-year strategic investment.
That I like. I mean, Gary Kelly's been incredibly responsible, the CEO, the whole way. He's raised money. He raised money, by the way, at a price where you're up about $7. Got a very good balance sheet. Doesn't ever let us down. I mean, he is the stalwart. If you wanted to go buy Southwest at $9.40 after the fomentation, or maybe $9.50, you could go do it if you'd like. I looked at what happened yesterday, and I saw some incredibly high-quality stocks be thrown out in the last half hour that I think represent better buys than these airlines. But that's not what this market wants. They're confusing Eli Lilly with JetBlue. Those are very different entities.
Yeah. Brings to mind sort of the picture about the reopening, Jim, and the spike in cases. A lot of debate this morning about whether it's overflow from Mexico. It's certainly not parabolic, which the bulls want to argue means you don't need to worry about it being a function of the protests. It's more a general reopening dynamic. Kudlow's on the tape today, says we're not seeing a second spike. Do we believe him?
Well, I look at the Johns Hopkins numbers every morning, and it's actually pretty encouraging. And the Hopkins numbers they're not political. So is Larry right on this? I just say go look at the Hopkins numbers, and make your own judgment. There's a bit of a bump up in Texas. There's no doubt about that. But most of the curves on the Hopkins page and state by state look pretty good. Again, there's a lot of people who I think are hearing news items which say that it's much worse, but the Hopkins numbers don't lie. Hopkins has been that's not a company, it's the school that's been most right the whole time, and their numbers are unassailable, and the numbers are pretty good. They're pretty good.
Yeah, indeed. Yeah, and then you got the president this morning retweeting Scott Gottlieb, who said that the Regeneron cocktail trial is, in his words, a critical milestone because that, Jim, is something that you could make available through emergency use authorization by the fall. And that's sort of the game changer that the bulls are counting on.
I don't want to put a gun to Len Schleifer's head, the CEO of Regeneron, but it could be before the fall. I think that he's got the cocktail. They did Ebola. George Yancopoulos, an incredible interview yesterday with Meg Terrell. Can I just say, Meg Terrell, all you need is Gottlieb and Terrell. You don't need anybody else. But it was very, very encouraging. And I felt really good after I listened to Len. Len was my first guest on Mad Money. His stock was at $5. It's at 609. It was never bid up before the market by anybody. And I think that Regeneron's news is so encouraging, and they have so much credibility that I, too, share the president's enthusiasm. This could be the game changer, not remdesivir. But remdesivir could be part of a cocktail. Now, Len Schleifer's been saying over and over again, it's going to be a cocktail. But I have the most faith in Regeneron of any company that's involved, other than Johnson & Johnson. And so I think I would look to Regeneron as the way to be able to get out of this morass and maybe get us restarted. Don't want to put, again, too much pressure on Len, who is, I think, a terrific guy.
That's interesting. It's probably one reason why two people, Jim, this morning on Squawk were net positive. Sandy Weil on banks, which we'll hear in a moment. But David Rubenstein of Carlyle, in his view, said the bottom of economic activity has been hit. Here's what he said.
I think the bottom has been hit. I don't think it's going to get deeper in terms of a recession than what we have now. I think we're coming out of it. I think people can overreact, and I think there has been some overreaction in the markets from time to time. Clearly, the economy's had a body blow. We haven't had anything like this for generations, but I do think we're on our way back.
Yeah.
Jim said he still sees Congress likely to do one more bill at maybe $1 trillion to $1.5 trillion.
We need to have a tide over. because there are a lot of restaurants, a lot of retailers that won't get to the promised land. This is like the Jordan River portion of the wandering in the desert. But I would say that we could have the fabled double-digit increase in the next quarter if Regeneron comes through. Now, look, you can say, well, Jim, you're just being completely too bullish. I have followed Regeneron the whole way. They were very honest with me at the very beginning. They said they had nothing, they had nothing, they had nothing, they had nothing. And then one day Len said, we may have something. And then he said, we may have something. And then he says, I think we have something. And then they start these trials. And this is not a company that is a fly-by-night company, of which some of them have affiliated here, candidly. This is a company that has so much credibility that if they think they have something, I mean, I called my doctor. I wanted to get into the Regeneron test. Now, my doctor's conservative and said, listen, you don't want to do that, and they're not accepting your age group, and you don't want to do it. But I think this is going to be the real deal. And there's no reason to not trust Len Schleifer. He's got way too much credibility. It's a real good company.
So you would contrast that with, say, Moderna, which is on the cover of the Boston Herald this morning with the headline, "Help is on the way." It's their hometown paper, but the story is largely about the trials that will begin there next month.
I read Stat. My old friend Adam Foyerson's there from the street. Well, I just feel Stat did that incredible piece about the liquidation by the chief medical officer, one of the highest execs of Moderna, and how he sold stock. And then Moderna did the 8 for 8. They came on and said, listen, we got 8 for 8. And then next thing you know, you got a big stock sale. And I had been a huge backer of Moderna because I really like the fact that they're affiliated. They work with the Amazon Web Services. They're very smart people, but it's never been, they've never been able to get anything through, never been successful in this. Right. And the stock sale did not need to occur. Okay? It didn't need to occur. And it tainted the situation.
Yeah, I think a lot of people feel that way, Jim. Yeah. After the break, we're going to talk about something else David Rubenstein talked about. That's election risk to the market. And we'll get to some of the retail names, big stories at PVH and Lulu and some others. Futures continue to improve here, up 650. Back in a minute.
This CNBC program is sponsored by PIMCO, a global leader in active fixed income.
Can I find an investment firm with a truly long-term view that's been through multiple market cycles for over 85 years? With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
Why bother mastering something? Because when you want to create an entirely new feeling, the difference between excellence and mastery is all the difference in the world. This is EX, product of mastery. Amazing at your Lexus dealer.
On Squawk Alley, breaking the cycle. What companies are doing now to diversify and bridge the divide.
Then is anything to change?
Corporate Inside Smart Solutions. Squawk Alley 11. Inside Smart Solutions. Squawk Alley 11.
A 4-week trial plus postage and a digital scale. Go to stamps.com/try and never go to the post office again.
Roxy loves Farmer's Dog. It smells good, comes in these convenient little packs. It's made my life so much simpler. This dog is my heart. I want her to have a long and healthy life.
Visit betterforthem.com.
Going into a pretty good tape this morning, PVH is down about 1.5%. Jim, one of the few retailers really that has said Q2 is going to be worse than Q1 was.
Wow. Manny Trico, I've known many times and has come on for years and years, was I think he was quite negative and talked about how there are many retailers that are really going to struggle here. He said this year was a mess. He said that he used the term BS. He said no BS. This is a very tough time for retail. There are only a few retailers that I think are going to come through this thing unscathed. One of them has a stock that's down that I think actually should be up, which is Lululemon. I like that quarter very much, and I think that there's a lot to recommend. PVH does not have necessarily the brand, so that's Calvin Klein and Tommy Hilfiger that can sustain. Lululemon's been a fantastic work at home, play at home company, and I thought the numbers were good, and it wouldn't surprise me if that stock is able to have a run. Now, when we talk about, by the way, what's running before market, I say, well, let's deal with the facts. Adobe was better than expected. People thought that was down. That down was really bad last night. That was a mistake. I think that Lulu is better than expected. I think that American Air is not better than expected. I think the Genius Brands, which trades like a Mexican jumping bean, it's going up, down, is the kind of thing that people are focused on because it's a $4 stock. And I just got to tell you, Carl, I don't mind people losing money, but I'd rather them lose money in real stocks so that they can buy more of them than buy stocks and then sell them because they're not up by 10 o'clock. And that's what I really fear. I have no desire to be a killjoy. I think you should buy a stock like Lululemon when it's down because it's most likely going to be up a few months from now because it's such a great brand. And it did well. I think that we are in an unfortunate period where there are a lot of people who would not buy when the Dow was down 1,700, and they waited for the futures to come out of their slump, and now they come in. And it would have been far better had they been buying into the decline than coming in all excited this morning. So, look, I apologize that I'm throwing a little rain on the parade, but you know what? Bring an umbrella, you'll be fine, and we're going to take a break and come right back.
Give your customers easier ways to pay with the platform built for effortless payments. Adyen, business, not boundaries.
How many golf courses can you play with Golf Now? Well, let's just say you have so many choices, you'll feel like a connoisseur of course selection. With Golf Now, you don't just have a lot of courses. You have over 9,000 picture-perfect places to play. Book around anytime at a course near you at the #1 place to book tee times. So, what are you waiting for? Go to golfnow.com and book your round today. Golf Now. Go play.
Access to precisely what they want when they need it the most. With Adyen, the payments platform that delivers convenience for all. Adyen, business, not boundaries.
CNBC's Disruptor 50 list revealed. Innovation accelerated by a global pandemic.
These are the names and ideas shaping the new normal.
Special coverage on air and online begins Tuesday on Squawk Box.
Take a look at futures here. We're going to try to work back some of what we lost on Thursday. We're coming off 5% drops for all the major indices and the first 3-day loss for the S&P since March. We're back in just a moment.
On CNBC, the latest on relief programs, tax help, and state-by-state updates. Protect your business. Get advice. We're here to help with all-day coverage on air and on CNBC.com/small business.
When we founded Tommy John, Tom was obsessed with how to make underwear truly comfortable.
So we reimagined comfort through fabric, fit, and function.
We use soft, breathable, lightweight fabric with stay-put waistbands that never dig and stretch where you need it. We made a women's line so comfortable there are no visible panty lines and no wedgies, guaranteed.
For a limited time, go to TommyJohn.com right now to get 25% off site-wide. Plus, we'll ship it to your door for free. That's TommyJohn.com. Log on now.
I'm Nick Konis.
I'm Grant Agus, the chef and co-owner of Michelin 3-star Alinea in Chicago.
When we first heard about Made In, we were very intrigued. You would think a pan is a pan until Made In came along, and I went, wow, these things are something better.
Those are the pans that we use at Alinea. We're going to have the best pans in the world at one of the best restaurants in the world.
There is absolutely no reason that I ever need to walk into a store because I already know that it's built for a home cook like me, but fit for Alinea like him.
Marco Polo! Marco Polo! Marco Polo! Marco Polo! Marco
Sì.
Polo! Marco Polo!
Scusa, ma io sono Marco Polo, ma...
Playing Marco Polo with Marco Polo? Surprising.
Ragazzini, io sono Marco Polo. Sì, sono qui.
What's not surprising? Geico, helping you save even more on car and motorcycle insurance.
Ah, Polo.
Now get an extra 15% credit when you switch before October 7th.
Behind this mask is a grandfather of 14, a newlywed, a guy who just got into college. That's why behind these masks, Johnson & Johnson scientists are working to accelerate development of a COVID-19 vaccine, drawing on decades of experience responding to public health emergencies like Ebola and HIV. For the life behind every mask, the clock never stops, and neither do we.
It started in 1898, helping clients and communities invest in hospitals and schools, roads and bridges, farmland and forests, small and large businesses, and sustainable cities around the globe. It continues today, more than 120 years later, investing to make an enduring impact on our world.
The opening bell is brought to you by Nuveen, a leader in income, alternatives, and responsible investing.
Time for a mad dash. I think Jim is watching two downgrades today of Tesla.
Yeah, we've got a Goldman taking Tesla from a buy to a neutral. They like GM, neutral to buy. And then Morgan says Tesla goes to underweight there. 680 goes to 650 target. They fear China and tech competition. 132% move versus S&P -7. The Goldman piece resonates with me from one. Look, I don't think Tesla's a sale. I like Tesla very much. But what I like is that because we're not going to have, we need social distancing, because we can't carpool, because people are afraid of mass transit, I think autos are going to make a comeback. And that's why I like this Goldman call very much on GM. I also like AutoZone. I think that if you were to make a bet even on Ford, you can make money. I say bet on Ford because Ford doesn't have the balance sheet that I like. But GM has got very good China business. I think it's you don't need to sell Tesla to buy GM. That's kind of, I think, in brokerage artifice. But I think that GM can work, and I've been very anti the stock of GM for a very long time.
Yeah, Jim, it's interesting. J.P. Morgan last night was talking about this pent-up demand issue, more in terms of services, but their larger point is it's going to be impossible to know what normal levels of demand are going into the next few months, because there'll be explosive spikes in demand for things that people couldn't get or wouldn't go out to get. And so we're going to be left asking a lot of questions.
Yes. By the way, Hertz, they of the giant offering, have 700,000 cars that I thought could come to the market. The used car market should be actually hurt by that. Used cars are selling well. But if we take GM at face value and say that the Chinese market is back, that's a nice wind. That's a nice tailwind. Now, by the way, some people are saying that Tesla won't do well in China. I think that's crazy. But GM, I think, can work here for, and not just for a trade. I think it could be for an investment because of because of what's happened with COVID. It does make sense to have your own car.
Yeah, we should take note of the incredible month that Elon Musk has had, sending men into space. Tesla is now the most valuable automaker in the world. Jonas's point, though, at Morgan is China. Competition, right? We talked to Ford about VW partnership earlier in the week. Capital needs, near-term demand. Do those things add up to a small trim to the target?
Oh, I don't know. I mean, he's kind of like the Jonas Brothers. One day he comes in, he likes it, and then the next brother comes in, he doesn't like it. I think the Jonas Brothers, I love them. I once been on a concert at Robin Hood, and not the one Men in Tights that people are all excited about here. And they remind me of Jonas. I mean, they're kind of, sometimes they're up, sometimes they're down. And I'm sure that Jonas is a nice man, but he is all over the map. I don't know what to say about him other than Tesla's been real right. And he seems to enjoy commenting on it. He should make a song about it.
Yeah, well, we've talked to him in the past about his bull, the disparity between his bull and bear case numbers and so forth. The other big downgrade this morning, Jim, was BMO on CAT, going to 130, talking about, in their terms, a catatonic near-term recovery.
I thought that was a funny piece because when you read through it, it actually kind of felt positive. They talked about management being much better, about cash. They talked about some possible tailwinds coming down. But the stock is a trading vehicle. And I know that Caterpillar didn't come down enough versus the other cyclicals, so they want to hammer. It was a trading call, I believe. I think Caterpillar's is doing much better than expected, but I know that the numbers, the actual monthly numbers, were not that good. So this was a well-timed downgrade, but don't go short it because Caterpillar is not the old Caterpillar. It's better run.
Yeah, target 130 is not too far from here. Jim, we mentioned Sandy Weil on Squawk earlier this morning, talking about the banks, whether or not they're in good shape, and actually he managed to bring a couple of recommendations within the space. Here's what Weil told Becky and Joe and Andrew earlier this morning.
The financial industry is in very good shape this time, and I think that the stocks are selling, a lot of them well below book value. Some of them have created different models. And for example, I think companies like Morgan Stanley and Schwab are really very good buys for the long term because they really represent the building up of assets, recurring income. I think they've made a lot of very smart moves, and the stocks are really, really cheap relative to the potential.
Far be it from me.
Really didn't go.
I'm sorry.
I mean, I was going to say, Jim, he didn't really go too far in terms of Becky's question about whether or not loss provisions will be another story in the coming prints.
That's what I worry about. I mean, Goldman Sachs is, about $7 below its tangible book value, and it yields 2.5. But the fact is that these Goldman Sachs traded down to 130. That's not supposed to happen. The reason why some of these are not great is because they can't buy back stock. So you have these gap downs. It's hard for me to believe that you get a guy like Jamie Dimon, and if the stock's down $6, he buys the stock, but you're not allowed to do that anymore. When I look at the PE of JP Morgan 11 times, it does intrigue me, but I worry about loan losses. It's a recession. It's not great to buy banks in a recession. I worry about one day the Fed wakes up and says, you know what, we do have to take the dividends away. I worry about companies that are so linked to what the government can say about them. So I am not as Sandy is a great investor, a great man, great philanthropist. But these are stocks that you really got to buy when they're getting completely annihilated because they trade terribly on a down day. Terribly.
Yeah, that was one of the other takeaways from yesterday's action, Jim. Some who were looking for silver linings said that although there was a big gut check on equities, the credit by comparison held in relatively well. Would you go that far?
Yes, that's true. And it does say that the common stock market got overheated. I think it got overheated for the oils. But here we go again, Carl. Chesapeake Energy up $5. I mean, that's probably a worthless piece of paper of $5. I mean, it's just a game.
As Art Cashin just said in his note, Jim, the amateurs will be back today to ride the market, having been partially protected by the sell stops they used.
He's so right. Remember, they went to the roulette wheel every day, and it came up black. Yesterday it was red, but they have genuine belief that, well, listen, when you play roulette, it comes up black. Look at how many times it came up black. They didn't take that statistic course. I don't blame them. It was a really hard course. It wrecked a lot of people's transcripts.
Yeah. Check out that breadth. Awful lot of green this morning at the NYSE, celebrating an IPO. It's AZEK Company, a manufacturer of residential and commercial building products. CEO will join us on Squawk Alley this morning. At the NASDAQ, celebrating an IPO as well. It's a Burning Rock Biotech, provider of cancer screening, Jim, in China. As the IPO market continues to get our attention.
Chinese IPO. Okay. Looks like nothing's changed. DoorDash being valued at $15 billion. I mean, by guys who want to bid the thing up at a time when most restaurants are hobbled. DoorDash goes up in value at a time when Matt Maloney knows to cash out. He being the CEO of Grubhub, we get this valuation of $15 billion. It does feel like what happened with Lyft and with Uber. But when you've got these companies that are already invested, they like to buy more at a higher level. It makes them feel terrific. I don't know. There's a lot of stuff I'm not crazy about right now, Carl. Even though I do like most of the companies, and I understand why everything's green, because we've become a roulette wheel, and it came up, it landed on 00 today. But I do feel like Dostoevsky. I really feel like it's become the gambler. And I think it's a shame, because there's so many good companies that should not be subject to this. That should just be trading on the merits and not just subject to the whims of big hedge funds who come on and say it's done, the world's over, or it's great. And by the day traders who are now blowing out of the stuff they bought at 7 o'clock, and they're happy. Maybe they're even done for the day.
Yeah. There's two names in the red, Jim. ONEOK and Campbell's.
And look, ONEOK, it took an equity offering to get ONEOK down. That's Walter Hull's CFO. He's very, very smart. He knew to offer $26 million. Campbell's, well, I guess people are not staying at home because remember, when they reported, they killed themselves. I mean, they had a really good quarter, and then they said it can't continue. And that's very hard to argue with when the CEO comes on and says it can't continue. Look, last night when Manny Trico came on from PVH and basically said, I was very bullish about it. I said, man, his stock's down a lot. I mean, well, it's going to be a very tough year. So there are CEOs who are willing to say, you know what, it's not coming together right now.
Yeah. Every Dow name in the green. Jim, Boeing's up 8. Despite headlines that say they're pulling back on the MAX restart out of the Journal this morning, that they've told Spirit Aerosystems to pause production of parts that they were starting to make in advance of a resumption in production. So it's hard to keep that down. People want to believe that we're all going to fly again.
Well, look, I think Boeing is on discount is going to be good, because I do think they're going to get 737 approval. I do think that flying will come back. I don't think it'll come back nearly as fast as the initial people were flying. And that's part of that is because a lot of things are closed. And a lot of that is because of Zoom or WebEx from Cisco, which is doing quite well. But Boeing's a great company, and they do still have an order book. And I do think that Boeing can make a comeback. But I just think that all in good time. It's not going to be overnight. I still think that there's going to be a second half 737 MAX. But will the airlines have enough money to buy? I don't know. Does the federal government have to do another round of airline investment? And I think the answer is that they may have to. They may have to, not for Southwest, but they may have to for the other guys.
Well, yeah. Well, Mnuchin with us yesterday, and Kudlow, I guess to some degree after, did suggest that they would take a harder look at travel and leisure in this next round.
Yeah, well, I think that Secretary Mnuchin was talking about restaurants. I mean, when you take out 60% of the tables or 50% of the tables, you can't double the price of your how much you charge people. So you're just going to not be able to pay your rent. So you're going to go under, and the big chains won't have a problem. I think Darden will be able to do it. Jack in the Box had good numbers, but I think that almost every other restaurant where there are between 13 and 15 million people work is going to be struggling, which is why, again, I question the DoorDash $15 billion valuation, especially now that we have a deep-pocketed partner from Europe coming in and being one of the competitors. The restaurant business is the one that's most on the ropes because social distancing is difficult, and there's also studies the CDC has put out about how air conditioning can move droplets through a restaurant. So there are real issues unless you're outside doing social distancing, and it's an industry that I know that needs the vaccine. Let's put it that way. It needs a vaccine to come back, but when it gets a vaccine, it's going to come back with a vengeance. People like to go out.
Yeah. No, your point, exactly right, Jim, because the distancing thing ruins the unit economics.
Yes.
Masks, we know, are the closest thing we have to a golden ticket, but compliance is virtually impossible to make universal. I see David Buster's, though, up 12%. I mean, on the notion that we're going to start playing video games and pool in a gathered setting.
I think that's great. That company was trading at one point as if it was going to have to go bankrupt. When it traded down at 4 on the 18th, it's a lot of fun. It obviously requires crowds to do really, really well. When you're at a bar, by the way, there's a company that sells devices which show exactly where you can sit at a bar. And all I can tell you is that you need to be able to double the price of those drinks. Because there's just not enough people can get at a bar. And one of the things that's fun about Dave & Buster's, you go to the bar while the kids lose money on things like the claw, you know?
That's right. Jim, Microsoft. This morning, the president retweets a tweet that argues they should be banned from federal contracts as they now join the growing chorus of tech companies that are not going to play on facial recognition with regards to the police.
Well, I mean, I think that, look, these things are up to the execs. Look, what I don't want to be able to do it, but whatever. I mean, I think Microsoft is a very ethical company, maybe one of the most ethical I've ever seen. Amazon did it. And by the way, there was a nice note from Facebook, the Chan Zuckerberg initiative. Here, they actually talks very critically of the president. So, I mean, I think that there was an article in the paper about how the president's getting isolated on certain issues. And look, I play with an open hand. What happened in Minneapolis is so horrendous. I would like every company to rethink their policies about anything that makes it so that it's easy to track American citizens who may have done nothing wrong. Constitution.
As for politics at large, Jim, you know, Goldman's made no secret that they're getting asked a lot about election risk, the implications that would have on corporate tax reform. In their view, it would bring down their 2021 numbers by, I think, 11% back to 150. Bloomberg's got a piece out this morning that they say that if you're looking for one narrative as to why we got a gut check yesterday, it may be that predicted shows the risk of a blue wave is increasing. Do you think that's valid?
Yes. I think that that's very valid, and I think that it would be natural for President Biden to say that capital gains should be taxed at the same rate as ordinary income, because capital gains are something that the rich people have. If he said that, Larry Kudlow and I campaigned for low capital gains and low dividends when it was Kudlow and Kramer. But I'm just saying that it's very easy to see that President Biden could say, "Hey, listen, who really has capital gains? None of the middle class do. So let's just change that and raise money that way." That would not shock me. It's not what I want, but it could shock me. I think that they should be higher. But again, when you say that somebody wants their taxes higher, then people say, "Well, what kind of capitalist is Kramer?" Well, I think that I don't like how much the government owes. I think something has to be done. But I think that the idea that you would think that the market would come down with the President Biden is perfectly a realistic scenario.
Right. In fact, David Rubenstein earlier this morning pointed out the last president or the last incumbent to win in a recession was McKinley. Now, his view is that forecasters see the economy being out of recession by the time the election actually takes place, but that if we're still in, it will make it difficult for the Trump White House to get reelected.
Wow, McKinley. And he wanted to crucify mankind upon a cross of gold. Great speech by William Jennings Bryan, but McKinley took the honors there.
Yeah.
McKinley.
So we're back to a period here, Jim, where the Walmarts, the Proctors, the Verizons are going to be laggards today.
Right.
I guess we're going to wrestle with how long that lives. I noticed the Journal had an op-ed from the editorial board this morning that says that, you know, more infections are going to be inevitable. but the costs of shutting down the economy, in their words, are so great that there is no alternative to opening for the broader public good.
Yeah, and I thought that was the best part of the Secretary Mnuchin interview. We can't close it again. Holy cow, what a disaster. It's very interesting, too, to read the terrific piece in the Wall Street Journal about how devastating it was to do what New York did, how New York handled it the worst of any place in the country. And the shutdown continues. None of us really knows the rules about what's going to happen in New York. And I got 2 restaurants. If you know what we're going to have to do, Carl, let me know, okay? Because we took the PPP. Trying to figure out what's going to happen. We sell pizza, take out pizza now at one place. We got the margarita stand. But New York is just a shambles. And the mayor is still the mayor, which is rather extraordinary. If he were the CEO of a company, I think that wouldn't pass muster. But yeah, I mean, look, you're not going to buy you're going to buy the John Deeres today. You're going to buy the Industrials, Caterpillar. There we go, right? I mean, Caterpillar downgrade. So it's only up 3. Imagine if they hadn't said anything, probably be up 7. Look at the green. Yeah. What just lemmings. Where were they yesterday, Carl, at 3 o'clock? Where were they, the buyers? What were they doing? They couldn't be watching sports. There's no sports.
There's golf, but yeah, I mean, your point, I think, is broadly a good one, Jim.
Right.
I mean, yeah, definitely looking for some of the cream to be taken off the top. I think, some who were talking or watching levels on the NASDAQ said, let's hold 98.50. And if it gets below that, then we can worry big time.
Well, I just think that people have to recognize that you want to buy them when they're selling them. You don't want to pay up right here, particularly on a weekend going into a period where we have many things up in the air historically right now. So I don't know. I mean, look, I think the market is good. I think there's a lot of companies that are doing really well. A lot of companies that are worth buying. Lululemon was down 14. Now it's only down 3. Now that's interesting to me. I like that. That's an opportunity. Adobe was down 12 last night. Adobe was a really good call. I had Shantanu and Narayan on last night, the CEO. It is so clear that they are doing well. It is very, very exciting. So I think that there's tons of companies that are doing well that you want to buy, but not everything. Not everybody's doing well. I mean, how well's Gap Stores doing if they're being sued by Simon Property Group?
No, Adobe's an interesting story, Jim, and your interview was great.
Thank you.
I mean, their current quarter guidance isn't that far from consensus, but they did pull 2020 targets. I wonder what you think that means.
Oh, I think that Sean News recognizes that it's very hard to get a read on all of his different constituencies. He's got retail constituencies. He's got a DocuSign kind of business that's doing incredibly well. Look at that stock. See, isn't that great? That stock was down so badly last night, and people wanted to throw it away. And then you listen to the conference call, or you listen to the interview that we had in the conference call, and you recognize what a powerhouse that they could do these kinds of numbers in this kind of slowdown. And he gives 30 million copies away of his most important Adobe Illustrator to kids. So that he can equalize things. He's not a guy who said he's not what I call a hearts and minds guy, which is my hearts and minds go out. His product goes out, and that's what we need to see. He is a true great American doing fabulous things for this country, and he's also doing great things for his shareholders.
Yeah. Interesting. Adobe up almost 18 as we're a stone's throw from 26K once again on the Dow. Let's get to Rick Santelli this morning in advance of some data at the top of the hour. Hey, Rick.
Yes, we'll get our University of Michigan sentiment on top of the hour preliminary read for this month. If you look at a 2-day of 10s, it really has been a wild week. We were down to 64 basis points intraday yesterday, and now we're just crossed 70 basis points, which means we're down pretty much exactly 20 basis points on the week. 30s are down an equal amount. And if you look at a 1-week chart, what really should jump out at you is the fact that, we really fell every single day this week except for today, but today obviously isn't finished. Open the chart up to early March, and you can see the reason 64 made many traders a little nervous yesterday. It's only 10 basis points off the the lowest yield close ever, which was on the 9th of March, as you see on that chart. If you look at a month to date of the dollar index, we are down 1.6% currently for the month of June, a fairly astonishing amount. And if you go back just a few more days beyond that month, the numbers even get bigger, down close to 3%. And what really is amazing with the dollar indexes is that if you go to year-to-date chart, 96.40 is where we settled last year. We only had one day, and that was the 9th of March, that it was lower until this week. Of course, we had our second day. We are now hovering slightly above unchanged on the year and only down slightly on the week. And as far as what happened yesterday, probably Jay Powell not being optimistic and COVID news, but I'm not sure politics. I don't remember President Dukakis. We would have had one, though, if the polls were accurate at that point in time in history. Carl, Jim, back to you.
All right, Greg, thanks a lot. Let's get to Bob Bassani this morning, see what's moving on the floor over there. Hey, Bob.
And here we go again. We've regained almost half of the losses. It's the reopening story here. Just take a look here. Transports, Russell 2000 rallying, banks and energy all above the S&P 500, retail as well. Just very hard to figure out what's going on. Just look at the energy stocks, another rally today. But Marathon, you watch Marathon, the last 7 or 8 trading sessions goes from $6 to $9 to $7. All of these stocks have done the same thing. The same with the industrials. You look at the airlines. United Airlines went from $30 to $50 in a few days, and then back to the 30s here, as you can see. General Electric, same thing, went from $6 to $9. Now it's back into the $6 range. It's very $7 range. Now, just very confusing figuring out what's going on. You think the banks would be better? They're not, though. Citigroup, same story. Citigroup went from $48 to $60 in a few weeks, and now it's back to the $48, $49 level here. So just remind everybody what moves markets and what has been moving markets, those buckets we've been talking about. Valuation here. Are we overvalued or undervalued? The market can't to figure it out. Yesterday was clearly a vote for overvalued, but who knows? The reopening story, we're resetting the pace of the recovery. The Fed has pricked the V recovery crowd, but certainly a positive on fiscal monetary stimulus. Big packages are coming there. Should you buy the dip right now? We've had a 6% downside day. Pretty rare. These 5% downside days, we had several of them in March, and every time you would have bought that, it would have worked. We're above where those numbers were even on March 18th. Remember what drives stocks. The problem right now is the earnings growth. The dividends are not growing at all. Market multiples are expanding or not. And the liability, of course, the liquidity out there, money to buy stocks or not. Certainly not. Finally, guys, NYSE definitely going to be expanding next week. The reopening, bringing more DMMs in. Slow pace of their re-expansion, but that's happening next week. Guys, back to you.
All right, that's going to be interesting to watch, Bob. Hopefully we can be a part of that, Jim, at some point down the road.
I hope so. I miss you.
There's a look at the S&P 3081, VIX 37 after having gone from 24 to 40 in a week. We're back in a minute.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
You can't predict the future, but a resilient business can be ready for it. A digital foundation from VMware helps you redefine what's possible now. From the hospital shifting to remote patient care in just 48 hours, to the university moving hundreds of apps quickly to the cloud, or the city government going digital to keep critical services running. You are creating the future on the fly, and we are helping you do it. VMware, realize what's possible.
Can I find an investment firm with a truly long-term view that's been through multiple market cycles for over 85 years? With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
What is your lotion wish?
I want coconut oil,
cocoa butter, shea butter.
and no more reapplying.
We listened. Gold Bond Radiance Renewal gently exfoliates, then our triple blend of moisturizers helps prevent dry skin. Gold Bond. Ultimate lotion, ultimate skin.
As business moves forward, we're all changing the way things get done. Like how we redefine collaboration, how we come up with new ways to serve our customers and deliver our products.
This one is cheddar. It's delicious.
But no matter how things change, one thing never will. You can rely on the people and the network of AT&T to help keep your business connected.
In an era where we're afraid to touch cash or hand over our credit cards or type on potentially COVID-encrusted keypad, Shed or Apple's Pace contactless technology has become a necessity. Honestly, watch or listen live on the CNBC app.
We're getting some breaking news this morning on Starbucks. For that, we're going to turn to Kate Rogers. Hi, Kate.
Hi, Carl. Well, Starbucks is out with a new letter to its partners or employees this morning saying it will be partnering with the Starbucks Black Partner Network and Black Starbucks leaders to make 250,000 shirts available to company-operated partners in the U.S. and Canada to affirm the company's support at this critical time in our history. Until these shirts arrive, partners will now be able to wear their Black Lives Matter pins or T-shirts in, quote, passionate support of their community and humanity. Now, this letter from Ross N. Williams, Roz Brewer, and Zing Shaw goes on to say, as we talked about earlier in this week, we are designing new T-shirts with the graphic below to demonstrate our allyship and show we stand together in unity. Until these arrive, we've heard you want to show your support, so just be you. Wear your BLM pin or T-shirt. We are so proud of your passionate support of our common humanity. We trust you to do what's right while never forgetting that Starbucks is a welcoming third place where we are all treated with dignity and respect. This comes after a BuzzFeed news story on the company not allowing baristas to wear their Black Lives Matter related attire like shirts or pins on the job because it was in violation of the company's dress code policy. At that time, there was some pushback, particularly on Twitter with hashtag boycott Starbucks gaining some speed. So now the company reversing course on that, saying that its partners and employees are allowed to wear their BLM attire, and these new shirts will be arriving in stores. Back over to you guys.
All right, Kate, thank you for that. Yeah, Jim, the reporting on that last night was curious. Interesting to see them come out with such a stance.
Yeah, look, I believe in free speech, and I think that this is a level of free speech that I thought that Kevin Johnson would support. He's the CEO. Look, I remember Howard Schultz tried to do a race initiative. I think it was poorly timed. But look, if companies can have free speech, allow people to have free speech, I think it's a good thing. I mean, I'm pro social change here. So there's just no two ways about it. If you're either pro social change or you're standing in the way of social change.
The period where they tried to ride both trains, Jim, that's over. That period is over.
Right.
You can see that from some of the decisions these companies are having to make and are making. So we are up 718 on the Dow. A lot more with Jim when Squawk on the Street continues after a short break.
There are times when our need to connect really matters. To keep customers and employees in the know, to keep business moving. Comcast Business is prepared for times like these. Powered by the nation's largest gig speed network to help give you the speed, reliability, and security you need. Tools to manage your business from any device, anywhere, and a team of experts here for you 24/7. We've always believed in the power of working together. That's why when every connection counts, you can count on us.
Consistency can deliver on investment goals. Columbia Threadneedle Investments.
Ever since we've gone mobile on the Now platform, someone's gotten into the office.
I hear you. Feels like there's no barriers between departments now.
ServiceNow, the smarter way to workflow.
On Squawk Alley, breaking the cycle. What companies are doing now to diversify and bridge the divide.
Then is anything going to change?
Corporate Insight Smart Solutions. Squawk Alley, 11 a.m. Eastern. Watch or listen live on the CNBC app.
Have you wanted to speak a new language, but thought it would be too difficult? Then try Babbel. Babbel starts by teaching you words and phrases that gradually get more complex. Soon, you're practicing short conversations. So in 15 minutes a day, you'll be speaking a new language in a few weeks. Babbel works because it's built around real life. It teaches you everyday practical conversations that you will actually use. Babbel, language for life. Try it free at babbel.com.
I'm Nick Konis.
I'm Grant Agus, the chef and co-owner of Michelin 3-star Alinea in Chicago.
When we first heard about Made In, we were very intrigued. You would think a pan is a pan until Made In came along, and I went, wow, these things are something better.
Those are the pans that we use at Alinea. We're going to have the best pans in the world at one of the best restaurants in the world.
There is absolutely no reason that I ever need to walk into a store because I already know that it's built for a home cook like me, but fit for Alinea like him.
If you look at travel and leisure names, it's like yesterday barely happened, all up 15, 14, 13% for American, Norwegian, United, Carnival, and Royal. As the Dow's up almost 700 points on this Friday. Don't go away.
Ever since we've gone mobile on the Now platform, someone's gotten into the office.
I hear you. Feels like there's no barriers between departments now.
ServiceNow, a smarter way to workflow.
Can I find an investment firm with a truly long-term view that's been through multiple market cycles for over 85 years? With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
It's only human to pursue the elusive, while also capturing the possibilities. Even something like CO2. Chevron has spent over $1 billion on carbon capture projects and is investing in startup companies working to transform carbon into new forms of energy to help address climate change.
Land Rover, above and beyond.
Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
It's time for Jim and Stop Trading.
Okay, I've been a killjoy in a lot of names today, but I do want to emphasize that Norwegian Cruise Line Holdings, run by Frank Del Rio, is the one that I believe has the best opportunities. He's got some new ships. He's got a lot of great things going. He'd been fixing his balance sheet, and it has been it's been clubbed. It's down 66%. So if you do want to play that group, I would play it with Norwegian because I think they're so well run.
Interesting. I see Carnival today, Jim. The Holland line extended their pause of operations, but you're definitely choosing a favorite here.
Yep, I think Norwegian's got some incredible prices for next year. And I'm trying to convince my wife because I think that they've got I have been on their New Haven line. Oh, my, they're fantastic. And I have a belief that we're going to have a vaccine, Carl. If you get a vaccine, you're going to want to buy those cruise prices right now. Now, that's a good investment with the vaccine. And I'm counting on J&J, and I'm counting on Regeneron, and I'm counting on my wife recognizing that if you're in the Haven part, you get to be in the solarium and watch the calving of the glaciers. One of the greatest things I've ever seen in my life. And I think that Alaska's terrific.
Jim, we're going to see it tonight, but we're actually going to see you in the 11 as well, right?
Oh, yeah, because this ASIC is something I know Jesse Singh, he's the CEO. I've got the product. The product is fantastic. It's like a Trex for those who've watched Trex come on the show. And it's great to see real companies with product made in America that's recycled. This is the kind of deal I like. And then tonight I've got Zora, which is this subscription company. And then Michael Neidorff, Centene. What a horse that thing is. And he explains things better than most about healthcare. What an exciting show, Carl. Miss David, though. Miss you.
Yeah.
One day we'll be downtown.
One day we'll be together, man.
Yep.
I know it.
We'll
see you in a little
after.
bit. Jim's going to join us on Squawk Alley. In the meantime, good Friday morning, everybody. I'm Carl Quintanilla with Sarah Eisen. Mike Santoli's in for Faber this hour. Let's get consumer sentiment with Rick.
Yeah, Carl, these are a bit surprising. We were expecting a number around 75. We jumped up to 78.9. That is a small victory, and it's the best level since March of this year, of course, because it was at 89.1 then, and then it dropped into the low 70s. And if we look at current conditions, it moved from 82.3 to 87.8. Expectations moved from 65.9 to 73.1. All right, here's something interesting. The one-year inflation moved from 3.2 to 3%. And the reason I really want to concentrate on this is that 3.2 read that we had in the final of last month. That was the biggest gulp of inflation since the summer of 2014. So it did moderate a bit to 3%. Remember, these are preliminary readings. We'll knock them out in a couple weeks for final readings. And last but not least, the 5 to 10 year read moved from 2.7 on inflation to 2.6. So these numbers do at least show that there is a significant worry about inflation. It's just the timing that seems to be in question. Sarah, back to you.
Rick Santelli. Rick, thank you. Stocks on track for their worst week in 3 months, despite the rally today, gaining some of yesterday's steep losses back. We're still looking at declines of around 3% or more for the week. Rosenberg Research founder and chief economist David Rosenberg joins us now. David, these moves are insane. A 5-6% down move in one day, a 40% run up in a matter of months, a 30% down move before that in a month. The bulls will say yesterday was healthy. I have a feeling you disagree.
Well, I guess that the bulls will say we just took some froth off the market. But let's take a bigger picture perspective here. The market has been on a manic roller coaster ride for years. I mean, we can go back to the fourth quarter of 2018 when we had a 20% correction, forces the Fed to cut rates when they were supposed to be raising rates. Last year, we have after a 20% down, fourth quarter 2018, 30% up last year. Then we have the meltdown, 30% meltdown. The Fed has to come in again dramatically, and then the market rallies 40%. So, look, it's been a huge roller coaster ride the whole way through. I think if you're taking a look at the bigger picture here, and you're taking a look at the total return in the stock market, it's no higher today than it was last July. So you're really left, even with the dividend, with no return. Actually, if you're asking me what is the place to be and consistently that doesn't get a lot of attention in the media, is the long bond. The long bond. The stock market this year, despite all the ups and downs, the pandemic, the lockdown, and then the huge policy response, you're still negative 6% on a total return basis for the Wilshire 5000. The long bond has generated a plus 25% year to date, and nobody ever talks about it.
Yeah, you could also be in the bonds of Coca-Cola or Microsoft or Apple, all these companies issuing debt, the blue chip companies especially, they've had even bigger returns, David. What does that say about the environment we're in?
Well, look, that basically with all the stimulus and with the Fed coming in and backstopping the credit markets, you've had a massive, risk on trade. The difference between buying a corporate bond as opposed to, say, Treasury, even with the amount of fiscal deficits, is that this is what makes the Treasury market special and different from any other asset class, Sarah, is that full well what you're getting paid at the end of the maturity. No other asset class gives you that complete capital preservation. I mean, there's always duration risk, there's rate risk, you can say there's inflation risk. But with Treasuries, there's no capital risk. Like you buy even a high-quality corporate, high-quality muni, you may end up losing money on that. But the reality is that if you're holding the bond to maturity, you know where you're getting paid at the end of the day. And I'll say this much about the bond market because that's where I'm really most bullish on right now. The Fed gave us a lot of really important information on Wednesday. They're not raising rates for years. Even in the next 3 years, inflation does not even come close to their target. And we're left with a huge output gap. And they're already talking about yield curve control. which tells me that we are going to take the long bond yield in the United States by hook or by crook down to 0.5%. That's actually, I mean, that's something I can see right in front of me. And if we get to 0.5% on the long bond, because most people don't understand the trade-off between convexity at these low levels of interest rates, if you buy a long-dated zero-coupon bond today, and we get down to 0.5 with the long bond, which is where Japan is today, that's a 36% total return. So I know that everybody's focused on the stock market, but the real money is going to be made in the long end of the Treasury curve.
Dave, of course, that would go in reverse if of course, yields went up. I mean, just to make sure people recognize, you're talking about price changes at the long end of the yield curve can be dramatic in terms of returns. I do want to get from you, though, the idea of what has to happen, if anything, in terms of the economy for that bond bet to pay off. In other words, is it immune to the idea that we are in, past the worst of this extraordinary recession? You have jobless claims have peaked on the way down. You have consumer sentiment seems like it's bottom, it's on the way up. So can you own long treasuries and not worry about the fact that maybe people think the economy is getting better?
Well, look, the economy is definitely going to get better in the third quarter. We're going to get this reflexive rebound. I mean, the Atlanta Fed right now, the nowcast forecast for second quarter is like negative 48% in annual rate. I mean, we had an absolute deflationary detonation in the second quarter. So there's going to be a reflexive rebound. There's no doubt about that. But the outlook is very uncertain. You know, that's what the stock market didn't want to hear from Jay Powell, is beyond the reflexive rebound, he has no visibility. What I'll say to you is that there is not going to be a run-up in interest rates without there being inflation. And the output gap, the supply-demand imbalance is so huge, it's going to take years to get there. And, you know, what's interesting is that the San Francisco Fed 2 months ago did a whole report on 15 pandemics back to the past 500 years and found that there's aftershocks after the earthquake, and they are deflationary. And you end up with a huge savings investment imbalance that lasts for years that take interest rates down even past the worst point. Like I would say, you know, is there a risk that interest rates could go up for the next, say, 2 to 3 years? Well, there's always a risk, but I wouldn't make that a base case scenario. I think that the base case scenario is going to be that interest rates out the curve are going to be moving lower and lower over time. We're not through this deflationary situation, even if we get past the worst point of the eye of the hurricane. Just the output gap is just too big. We're just got to climb out of this hole. I mean, look at the Fed's forecast. It's going to take years just to get back to the starting point. If you look at what the CBO told us the week before this week, they said it's going to take 8 years. In their forecast, 8 years to get back to the starting point from the pre-crisis trajectory in GDP. So the odds that we're going to get interest rate increases on a sustained basis, I see that as a very low odds event. This is going to be much more Japanese in nature than people believe.
Yeah, I mean, in effect, though, Dave, that means believing that the consensus got it right, because bond inflows have been massive into investment grade bonds, and it's interesting to hear you sort of putting faith in the Fed's forecasts out 2 years, when it seems to me in past years you didn't think the Fed was any good at that forecasting the economy.
Well, I'm not just basing it on their forecast. I said before, like the San Francisco Fed, in my opinion, they put out amongst the best research out there. Go and take a look at the report they put out 2 months ago on the multi-year after effects after a pandemic. Okay, this is simultaneously a supply shock and a demand shock. The initial impact is, of course, a deflationary shock through demand. But what happens over time is that the excess supply of savings drives the natural rate of interest ever lower. And don't forget, we started this cycle at egregiously low level of where the natural rate of interest is. And that's why people are talking about the potential for negative interest rates. I don't have to go there. I just have to know that in an output gap situation, in a period of deflation, and the Fed pegging the funds rate at 0%, almost to perpetuity, the long end of the curve in that situation is going to continue to gravitate lower, and the total return, that's the power of convexity at these low levels of interest rates, is going to generate very powerful returns at the long end of the Treasury curve. Now, you can talk about corporate credit. The flow's been going into corporate credit. That's fine. You know, spreads blew out. That was basically a relative trade. But you can't get the duration in most corporates that you can get in the Treasury market. You can actually get great duration. And of course, you know, the assumption drives the conclusion here. But I think that's what people are missing. We're also focused on the equity market as if that's the only way you can make money. And it's become a bit of a casino. But the bond market is trading more on fundamentals. Okay, people aren't opening up Robinhood accounts to trade bonds. And so if I'm right on this, and I'm especially right on what the Fed is telling me, the short end of the curve, I think at some point they will go to yield curve control policy. It's happening in most other parts of the world. And you're looking at what is the odd man out here. As much as you'll say that a 1.4% long bond yield is like egregiously low, taking a look where long-term rates are trading around the world, the U.S. is the one-eyed king. So I would say that that's really the place that you want to be focusing your attention on, not just the fact that bonds are a stabilizer in the portfolio. They're going to make you a lot of money in the next 12 months if the yield curve flattens and rates come down.
David, just the only pushback I would have on the whole bearish deflationary world for a long time is that, consumers do appear a little bit more confident and a little bit more willing to go out than I think you and a lot of folks expected. We just got that UMISH number on sentiment. We're watching the tracking data, and we don't even have a treatment or a vaccine, both of which are in production with all of the greatest pharmaceutical companies around the world spending all of their resources on that, and a lot of optimism that we're going to start to get some, at least bridge treatments to get us through the fall. I mean, what happens in that scenario? That's the optimistic case.
It's an optimistic case. So you tell me what the market has been pricing in for the past 3 months. The market's been pricing in a vaccine coming to the fore by the end of the year, pricing in tremendous fiscal and monetary stimulus. I mean, the market already has priced a lot of this in. Maybe not all of it, but the market wasn't pricing in nothing over the past 3 months. Sarah, it's not every single day on 3 months you get a 10 multiple point expansion in the stock market. This is actually a market, and this is as earnings expectations have been coming down because the market is looking to the future, and that's exactly what they're pricing in. Is that going to generate like inflation? Is that going to mean that all these millions of people that lost their jobs are going to come back right away? We built up a huge imbalance between supply and demand. That's what drives inflation. Consumer confidence in the month of June does not drive inflation for the next several years. It's all about supply and demand. And that gap is not going to close just with a vaccine. So we're going to be into a multi-year period here with or without a vaccine. That's how deep this shock was, and the hole we have to climb ourselves out of. That's going to be in place for a long period of time. The Fed's already told us, Powell told us at the previous meeting to the one on Wednesday, that the Fed is going to anchor short-term rates at zero well past the point of recovery. That's like, that's like a free pass for the long end of the curve. And inflation is not going to go up just because we get a vaccine. We still have to work through this output gap. It's going to take years. And I'm going to say that is basically the wild card here. And the place to have made money in the past year and year to date has been in the long end of the Treasury curve. I don't see that changing.
All right, we're going to hold you to the forecast. David, thank you for joining us. Always good to get your thoughts. David Rosenberg.
All right, guys, we have avoided, as we did many times earlier in the year, a second day of massive declines, big bounce in the airlines. We're going to check in with Cowen's Helene Becker, one of the key analysts on the street for many years, about what these traffic patterns may mean for the stocks when we come back.
Can I find an investment firm with a truly long-term view that's been through multiple market cycles for over 85 years? With Capital Group, I can. Talk to your financial professional or consultant for investment risks and information.
Things we love can be painful. Aspercream's triple effect provides targeted relief, works in minutes, lasts for hours. What hurts? Aspercream works.
Yes, we have responsibility to our shareholders, but we also have a broader responsibility to society. And that includes giving everyone an opportunity to participate.
An easy way to address economic inequality is to make sure that equal pay is a reality.
Right now, companies can take a look, and if they find inequity, fix it.
People of color have much harder time accessing mortgage loans. We've got to intentionally create programs and help solve this wealth gap.
My son needs this drug. I hope it doesn't cost too much. I hope my insurance pays for it. Can you tell me how much this will be?
67.
Sorry.
Wait, have you heard about GoodRx? GoodRx finds free coupons to help you save up to 80% on your prescriptions.
Wow. I had no idea.
GoodRx. Stop paying too much for your prescriptions.
This is a keepsake frame. This is actually a photo from my wedding. I'm Adam Weiss, founder and CEO of Keepsake. If you're anything like me, you've probably got 7,000 photos on your phone. And sometimes the moments that really matter most end up getting lost. That's why I made Keepsake, the mobile app that makes it easy to have your photos printed, framed, and shipped to your doorstep. So if you've got a special photo on your phone, install the free Keepsake app. We would love a chance to frame it for you.
Airline stocks rebounding in a big way this morning after steep losses in yesterday's session. Joining us now is Cowen airline analyst Helene Becker to talk about this group. Helene, good morning. You've covered this industry for quite a while. I'm sure this is maybe the most extraordinary period of time the last few months to follow these stocks. You've had obviously a near disappearance of all air travel, followed by bankruptcy risks, a bailout, and now of course these stocks have become a little bit of the favorite plaything of some retail traders after having been shorted to maybe close to zero. So where does that bring you in terms of navigating the big names in this group, starting with, is American Airlines going to remain out of bankruptcy insolvent and take it from there wherever you think makes sense in terms of opportunities?
Yeah, so it's you're right. It's been PTSD driven for the past 3 months as we've gone through all the things you just talked about. And, we saw 500,000 people travel yesterday through TSA. I'll point out that back in April, it was taking 2.5 weeks to get to 2 million people, and we did 2 million people this week. So we're still down 80% year over year, don't forget. But we have seen this improvement. And Carl noted earlier this morning that, I said that we'd be 400,000 passengers by August and 1 million by the end of the year. And it looks like we may be there sooner. I think that what the airlines are doing to convince people how safe it is on board the aircraft is important. We don't think American is going bankrupt. I don't think failure is an option for any of the airlines. And for American, think about it this way. Everybody talks about the stressed balance sheet. They'll have $50 billion of debt at the end of this quarter, but they don't have to pay 100% of it back, right? They just have to pay back half of it. And, another $6.5 billion that they get from the government, they have a decade to pay back. The pension plan is 74% funded, so they only have to get it to 80% by 2024, and they made some voluntary contributions in the past couple of years that have them in a good position. So we don't think bankruptcy is on the table for them. And, they said this morning in a press release that they'll be cash flow break even by the end of the year. I think that took a lot of people by surprise. And I think you've had this combination of better than expected numbers, the traders that you pointed out, and then there's been short covering. So I think that's why American has done so well recently. But if you go through the analysis, you don't have to get to zero debt by any time frame.
Sure. Should American or do you think they will issue equity just to shore things up a little bit?
Yes. In fact, every airline should issue equity to shore things up. I know it's an expensive form of financing, and I'll probably get lots of emails telling me how wrong I am, but that's okay. I think that, if you issue equity, you're doing it you're issuing equity at a point in time where your stock is very cheap. But on the other hand, you're not adding debt to the balance sheet that you have to pay back. Every dollar of debt has to be paid back at some point in time. So yes, they should definitely issue equity.
Hey, Elaine, it is Carl. Everyone's celebrating sort of the return of, I guess it's domestic travel, but how much of a hangover will corporate and certainly international corporate travel be, and for how long?
Yeah. So, hi, Carl. Thanks for asking the question. So here's the thing: you can't remember a year ago we were doing 2.7 million passengers a day, right? And if international is 40% of the total, and you don't have any international, you know, right there you're taking out 1 million passengers. And then for corporate, you know, figure corporate's about 15 to 20% of the total. They provide half the revenue. So I think that, you know, without corporate coming back, you're not going to get fully back to where we were a year ago. It's going to be visiting friends and relatives and leisure, which I know tons of people have come on, you know, your various programs and talked about. But I think that, you know, airlines have to figure out a way to be profitable with leisure going forward, because I think business is going to take a while to come back. I've heard some of our clients have said they're not even going to be traveling, you know, this year at all. Between now and the end of the year, other than for personal reasons. So I think that that's probably not atypical of what a lot of corporates are thinking.
Yeah, and I wonder if you think corporations, when they are assessing travel needs, I'm assuming they're not going to be driven as much by fare discounting. I mean, and as for venues to go to, I mean, we got Disney opening in California and Florida, but there's little indication that conferences are on their way back to an equal degree. Is that right?
Yeah, it seems to be that way. I'm hearing more and more conferences, including our own big September conference that we always hold in Boston, is going virtual this year. And that's unfortunate, right? I mean, for people who have their careers well established, it's okay not to go to conferences in general. But for people who are young and starting out, you like that conference for networking, to build your network. You need to see people in person. So it's really unfortunate that this is putting all of that on hold. But yeah, we haven't heard of too many conferences going live this year right now, which is really unfortunate. If you had told me in March I'd still be working from home in June, I never would have believed you.
And in terms of sort of immediate investment implications, Elaine, I know you do recommend American, Southwest, a couple others, but the price targets aren't too far above where we're trading right now. How would you play them?
I know, I have to think about that. So here's what I think about the stocks. When you think about the recovery, it's who's going to win the recovery. I think we've moved past how we're going to survive the downturn, right? And now, as an airline manager, you have to think about winning the recovery. And I think the airlines that win the recovery are those airlines that, you know, if you fly 60% full until July or September, the good news is that you keep more people employed. So as demand recovers, and if we have a vaccine in the fall or the winter, you have that ability to recover quickly. And I think that's really important. And so, you know, think about where the stocks were in January, right? I mean, American, it was $35 a share. And obviously there's going to be dilution with the government's ownership and so on and so forth. But why can't the stock, you know, move up from current levels? When the stock was at, I don't know, 11 or 12, we thought it could double, which doesn't seem like a brilliant call right now, but it was then as a contrarian name. You know, why can't the stocks get back to pre-COVID levels, maybe minus a 10% discount for additional dilution in an environment where we are in a recovery, which, you know, we have said, as Carl pointed out earlier, 3 to 5 years. And, you know, if we get there in 2 to 3 years, I would think that is huge.
Elaine, great to get your take. Thank you very much.
Thanks. Thanks, everybody. Thank you.
Now time for our ETF Spotlight. Today we're taking a look at the banks, ticker KBE, rebounding after yesterday's massive sell-off, but still on pace to snap a 3-week win streak and post its worst week, actually, since mid-March. The big commercial banks all in the green this morning, led by Citigroup, along with the broader market, which is climbing back. Not enough to make up for yesterday's deep slide or the week's more than 3% loss. But still, the Dow is going strong, up 689 points, a 2.3% rise for the S&P. We're going to take a quick commercial break. Stay with us here on Squawk on the Street.
Incomparable design makes it beautiful. State-of-the-art technology makes it brilliant. The Lexus NX. Experience the crossover in its most visionary form. Experience amazing at your Lexus dealer.
Yeah. Yeah.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
I was skeptical. So I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-514-7800. Coventry Direct, redefining insurance.
As business moves forward, we're all changing the way things get done. Like how we redefine collaboration, how we come up with new ways to serve our customers and deliver our products.
This one is cheddar. It's delicious. Oh, you look so healthy.
But no matter how things change, one thing never will. You can rely on the people and the network of AT&T to help keep your business connected.
Pete Davidson is the king of Staten Island.
We thought you could help Ray bring his kids to school.
What?
Kelly, do you know him?
He's a new friend.
You okay? You know, you can tell me.
I'm okay.
Oh, I trained her in the car. She's not going to break. The king of Staten Island. Rated R. On demand now. Go to thekingofstatenisland.com.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News update at this hour. Air travel continues its comeback. More than 500,000 travelers went through TSA checkpoints yesterday. It is the highest daily total in over 2.5 months and a 28% jump since last Thursday. Travelers, though, are still down 82% from the same day last year. But nonetheless, these latest numbers are a big improvement from the 90% declines at the worst point in the pandemic. The Republican National Convention is now officially moving to Jacksonville, Florida. Originally set to happen in Charlotte, North Carolina, the convention was moved after state officials there refused to guarantee the event could be held at full capacity due to COVID-19 safety concerns. And out in California, a two-day manhunt for a suspected cop shooter has ended in a shootout. Police say 26-year-old Mason James Lira shot one officer on Wednesday and 3 more on Thursday. Police say Lira was killed as he tried to escape his hiding spot in a riverbed. You are up to date. I'll be back in 1 hour. Squawk on the Street continues in just a second.
Our company's talent playbook just went out the window. We need a partner to help us stay ahead.
Who can help us change the way we work?
That's what Kelly does. Companies of all sizes are having these conversations. Kelly can connect yours with the right talent solutions. Visit that'swhatkellydoes.com.
Yeah.
This is Kate.
Hey.
She takes 2 prescriptions. Kate's son Jack takes 1 too. Kate works hard and thought she had good insurance. But she still pays too much. That's no good. So Kate downloaded the GoodRx app. Now she can compare prescription prices to find the best discounts. She even beats her insurance price. Good for you, Kate. Good for you. GoodRx. Stop paying too much for your prescriptions. Download the free app today.
Hi, I'm Hanno. I created Gabi because most people overpay on car insurance. Gabi is a free tool that saves you money by finding the best deal. Gabi users save more than $800 per year on average. Go to Gabi.com and stop overpaying for car insurance.
Meet Gravity, the original weighted blanket for sleep, stress, and anxiety. Gravity is the only weighted blanket demonstrated to improve sleep and reduce stress. Now available in cooling for summer.
A cautionary stance from the Fed this week did send stocks plummeting on Thursday, as you know. Rebounding this morning, Dow's up off the best levels of the day. We were up 837. Joining us this morning is a former Federal Reserve Vice Chair, Alan Blinder, talk about the Fed's response and the market's action. Alan, great to have you back. Congratulations on that Princeton chat with Powell. It was very warm and greatly informative. Nice job.
He's a good person.
I wonder what you made of the presser this week, and does he need to tidy anything up going into the House and Senate next week?
Well, he might tidy up the outlook. I think he was misread as being gloomy and doomy. I actually looked at the SAP, at the projections. I wouldn't call them very optimistic. Who's optimistic in this day and age? But they struck me as slightly on the optimistic side. If you did the arithmetic over the 2 years, 2020 and 2021, the Fed is projecting GDP to be down 2%. To me, that seems more optimistic than pessimistic, given what's going on.
So what does that mean for policy, do you think, going forward? And do you think that's being misread by the market?
No, I don't think so. I think the view in the markets is the Fed will do everything in its power to try to mitigate the damage, and then when the time comes to give the economy a little bit of a boost out of the recession, depression, whatever you want to call it. We don't have a name for anything like this. Lows. So I don't think the market's reading that. What I do think, and maybe that was part of yesterday's market reaction, who knows, is people in the markets tend to think of the Fed as Superman, that it can do anything. It can't. It has lots of power, and it's using that power. But it's not Superman. It can't do everything. It can't, for example,